Good morning, everybody. Good morning. Welcome to Monday. How you guys doing today? Everybody hear me okay? It is early on a Monday morning. Time to get to work. How was everybody's weekend? I see some of you did some replay. Tim, nice job getting in there and getting reps. I like it. Good morning, Alan. Guys, I'm going to warn you right now. I may sneeze a little bit this morning. Washington is on fire, and I'm living in this big smoky mess right now. It's kind of wild, very apocalyptic. But so if I mute real fast, that's why. Guys, I'm Mark. Educational page. Looking at it, Gary. I'm not sure what that is, but if I click on it, all it does is it brings up. Is that your spreadsheet from the weekend? Filling it up. Replay. Right on. None of those links work though, which you gave me. Just so you know, I've done this before. Um, it's just a picture of the links, so I can't get to them. But I do love some replay. Guys, remember that this is an educational class. Everything that we do in here is designed to get you where you want to be. Everything that we do in here is designed really to give you the highest chance of success as a new user, to build a foundation, and then from that foundation to grow into your own trader, to grow into whatever you need your trading to be. And that's always the goal. My goal is never to tell you how to trade. I don't call trades, but what I will do is I'm going to work with you on reading your indicators. And then from your practice, from the feedback you receive in this classroom, your simulation, and your repetition, you're going to develop a plan that suits your needs. You're going to develop a plan that fits your pain tolerances. You're going to develop a plan that is going to be 100% yours. Good morning, Jose Trades. I'm going to do my best each and every day, advantages in the pictures that you show me. And I'm also going to point out potential problems in the trades that you show me. Just because I point out a problem doesn't mean that it's a bad trade. It just means that this is one of those things that I want to make sure that you recognize as we go into it. So before we do anything though, each and every morning I come to forexfactory.com/calendar, and I'm taking a look to make sure that there's not some sort of news release that may affect the market, that might make it bounce and jump, behave a little crazy. Um, and Monday, August 21st, there's absolutely nothing going on. Whole lot of nada, guys. So there's no major economic releases. What I'm looking for every time I look for news is I'm looking for these red boxes or these orange boxes, these medium or high impact news. Not because I'm concerned about what the news is going to say, but because there's somebody probably waiting to react to it. And when people react in the market can spike or it can reverse without warning, or it can just really become too fast to trade. So every morning I'm going and I'm taking a look, making sure that I'm not trading into news. You may make the decision to do the same for yourself, or you may say, you know what, I'm not worried about news. I'll trade right into it. That's up to you, right? Um, and then everything that I talk about is going to come from the education page, guys, right here at the tutorial section. We do our best to never hold secrets, to never give you incomplete thoughts, right? So I want you to be successful, and what this class is designed to do, especially in the first hour, is keep you focused on being successful, to keep you focused on the best of the best, to learn how to read your charts. And the quickest way for you to get to where you want to be is post your trades in class. You see a lot of people posting these screencast links, you see people posting these pictures. This is your path to getting to where you want to be. Post those pictures in class and then get feedback. As you post pictures in class, one of the things that I really need new users to do, and old users as well, is I want you to annotate your charts. I want you to tell me why you did what you did. I want you to not phone it in. Don't give me a copy paste checklist where you didn't really pay attention if the rules were met. Write your rules on the chart. Mark, this is what got me in, this is where I got in, and that was my target. And this is why I did it. And then what I'm going to do is every day, every post that you put in there, hey, good morning, PFI. My goal is to hold you accountable to your rules, right? Because rules-based trading takes the emotion out. Rules-based trading has been proven to win more than it loses. Otherwise, they shouldn't be your rules. So when you tell me why you did what you did, we're going to have a conversation to make sure that your line of thinking lines up with what the indicators are saying. Because the goal of this classroom is to teach you to read your indicators. The next thing you're going to do after you post your pictures in class is you're going to be able to fill out the spreadsheet. The spreadsheet is in the Nexgen Study Picks folder. It's available for download from the website. But this is your trade journal. This is creating recognition through repetition. Every trade that you take, you're going to log. And a lot of us try to avoid it in the beginning. And a lot of people ditch the habit once they get into it a little bit. They're like, well, I've already taken 100 pictures. Why on earth would I take more, right? If you get in the habit of doing this every day, logging what you do. So if today you take 6 trades, tomorrow morning, I want you to look at those 6 trades and I want you to ask yourself, what worked? What didn't work? What felt easy? What kept you relaxed? What felt forced? Made you nervous? And a brief historical study each and every morning, guys, it's going to prepare you for the day, right? It's going to get your mind right. It's like that little pre-game psych up. And it's going to accelerate the learning because what you're doing is you're not only recognizing patterns in the market that are bringing you success, more importantly, you're going to recognize the patterns in yourself that seem to be fighting that success. Whether it's breaking rules, jumping in early, trading into areas that are likely to hold, you're going to recognize it in the morning and you're going to be able to set the tone for the day. You're going to be able to tell yourself, hey, today I'm not going to fight that trend, or hey, today I'm not going to fight that momentum. And what you're going to find is you're going to take one step closer to your ultimate goal each and every day. We're going to spend the first hour of classroom talking about a high probability trend trade. Um, the high probability trend trade is going to be a trade where every indicator on every chart agrees for the trade. It's when your triggers are the strongest. It's when there's nothing between you and your target. And it's getting into the market where the market is most likely to continue. And this high probability trend trade is your foundation trade. Because the high probability trend trade, and I'm going to go to the rules here, the high probability trend trade is going to turn you into a chart reader. And that's my goal for each and every one of you. It's easy to say that I want to be a day trader, but I want you to be a chart reader. Because 90% of what you do throughout the day will be reading your indicators, reading your charts. 10% of what you do in the day is going to be taking trades. Hey, good morning, Miss Debbie. Taking trades based on your chart read. And when you focus on this high probability trend trade, when you give yourself 20 to 30 days, really studying the entry and the advantages present, you're going to understand where the market is likely to continue. This is going to be the point where you enter the market. This is where rule number 3 is going to get you into the market because it's that bounce point where the trend is most likely to continue. You're going to understand where the market is likely to go, and these likely to go spots are going to create a management plan for you. You're going to understand where it's appropriate to exit those trades at Fibonacci when momentum is waning. And then finally, you're going to understand where the market is likely to stop. And for the new user, this is probably one of the most important concepts for 2 reasons. The first reason is that when we reach an area where the market is likely to stop, we call that a termination condition. And a termination condition really can end the trend. It can create a bounce that's untradeable. And what we know to be true is that the institutional traders, the people that are in charge of moving the markets, they recognize these key Fibonacci numbers as well. They recognize these areas that you have on your charts, and they may create a reaction to it. So by recognizing where the market is likely to stop, it's going to keep you from taking that last trade when that trend may be over. But the other side of that is these termination conditions that create a reversal in the market become an anchor for the highest probability trend trade that you can take. Spend a lot of time in this classroom talking about where the market is coming from. Is it coming from a good top or bottom, from a termination condition that creates a full reversal? When you take that high probability trend trade, that every indicator agrees on the chart, after a termination condition on your large chart, this is your best chance of success. And this is a trade that typically wins 70 to 80% of the time. And we're going to focus on the rules. We're going to focus not only on the rules and what they say, but the advantages that the rules provide, because those advantages are going to play out for the rest of your trading career. You'll be able to understand them and recognize them at a moment's notice. You guys will simulate your trades daily, every day on that simulator. Don't wait until you think you have it down, right? Get on that simulator and pull the trigger every time you think there's a trade. Make sure that you present it in class, and we'll give you feedback on anything that you see, everything that you do. Um, because the goal is we want you practicing the correct rules, because the correct rules should already be proven to win more than they lose. And if you're practicing the wrong trades, I was guilty of this in the beginning. If you're just trying to become a simulator millionaire, it rarely works out long run. We call that practicing long-term failure, because you're training your brain that it's okay to deviate from a plan that's been proven to win more than it loses. You guys are going to simplify your plan. Initially, we're going to focus on a high probability trend trade where every indicator agrees. And then I'm going to introduce you guys to what we call a medium probability trend trade. And a medium probability trend trade is when most of your indicators line up for that trade. However, a small issue exists. Your ability to read your indicators based on your study of the high probability trend trade is going to identify that area, that problem that exists. You're going to manage these trades a little bit differently. You're going to be able to use your chart reading to manage assertively, to make sure that as you get into these trouble spots, you're protecting your equity, you're protecting your money, to maybe take quick profits at these trouble spots, to get to a zero loss level, and understanding that there's challenges present, but your chart reading is going to navigate you through those challenges. But we want to keep it simple first. We want to focus on that high probability trend trade first, because it's going to set you up for success on those medium probability trend trades. And then we're going to learn the Fibonacci and trigger looks so that they're easy. And that comes from repetition, from seeing the same trade over and over and over. And that's where you're going to use your spreadsheet for the second half. There's a section in the spreadsheet called My Personal Trade Setups, or My Personal Trade Setup Looks. And when your rules are met, you're going to put that picture in here and you're going to say, hey, this is what it takes to get me in the market. This is what it looks like when my rules are met. And you're going to fill this up until it becomes easy. I've created a section of the client trades that are about 250 entries based on client's chart reading. And I put a little change to the verbiage up top. These are the client's perfect trades. These are the trades that were presented by the clients that fit their rules. Some of them deviate from the highest probability trend trade because their chart reading has expanded them beyond that basic form. But what you'll find is that all of these trades embrace advantages. And all of these trades had a statistical advantage each and every time they got into the market. So using that spreadsheet, creating the repetition until these looks become easy for you, until they're second nature, until your brain can find these trades in a matter of seconds rather than thinking through them in 30 or 40 seconds. And that's what happens through repetition. After class, you'll be able to go back and use market replay, replay the day, fix your mistakes, practice management. But you can take these pictures, go through, skip the trades that you shouldn't have taken. Take the trades that you shouldn't have skipped, and then take pictures of all of them. And please feel free to bring them back to class. And if you have questions, we'll talk about them. The goal for you guys is to repeat this process every day, to start from a point of simplicity, to build a great foundation, become a chart reader. And then once you're a chart reader, guys, the world is your oyster. Once you're a chart reader, you're going to begin to recognize patterns. Good morning, Jay Solar. Welcome back. You're going to understand when you still have advantages even though one of your rules aren't met. And trading is a very unique, what's the word I'm looking for? I want to say sport, but it's not a sport. It's a skill set, and it's an individual skill set. And you'll see things differently than everybody else because you think differently than everybody else. It's an individual concept. So what we're going to do, that's it, is you have to go through this process of repetition, through finding what works for you. And then present it in classroom, guys. I will never tell you that your trade is wrong. If I see challenges, I'll point them out. Remember that this is an educational room, and I have people on all levels. I have kindergartners all the way up to high school seniors, right? So when you show me a trade, and I love this picture, and quick shout out to Jay Solar. Thank you for sending this picture to me because I think that this is going to change the way we teach. Um, you may show me a picture where everything says down from a good top. You may show me a picture where your ability to read your charts finds an entry that maybe is a little bit outside of that highest probability trend trade. And it's not the perfect look, but it's such a good look that as you grow with the software, you will take this trade, right? And you took an acceptable chance on breaking one of your rules. And in the classroom, I will be obligated to say that rule number 3 wasn't met. I will be obligated to point out that that isn't your best of the best entry, and that's for the brand new users. That's for you guys that are really learning to get that consistency. But I'm also going to say what an amazing trade for you because this was a trade where you recognized all the advantages. This is a trade that had more for the trade than against the trade, and this is an unbelievable chart read that brought you success. And that's where you're going as a new user. Um, excuse me. But until you build that foundation, you're going to find it difficult to deviate from the very basic. And the very basic is the high probability trend trade. And Ron put a note in there. Nexgen is the best treadmill on the market. And I agree, guys. This is the best software on the market. John Novak always says, if you find something better, send it to him. He'll buy it, right? He'll test it. He'll buy it. Um, but the thing is you have to learn to use the software. You have to learn to read your software. You have to go through the repetition to become comfortable with the looks, to become comfortable with the patterns. And if you start with this highest probability trend trade, this trade that only has 3 rules, and each rule brings you an advantage in the market, you're creating that foundation to get the most out of the software. Based on the high probability trend trade, a trade is nothing more than momentum, a clear path, in an entry area. And those are the 3 requirements to take this trade. These 3 advantages, come to be on only 2 charts. We're going to keep it very simple in the beginning, guys. You're going to use a large chart to identify direction. You're going to use a large chart that's going to identify momentum, and your large chart is going to define the areas. And it's a broad stroke of a brush. Brand new users, you will use 1 bar in the moment on your large chart to get all of this information, direction, momentum, and areas. Your first 2 rules, your first 2 advantages for a high probability trend trade happen on the large chart. Um, Rule number 1, when it's true, will provide you the advantage of momentum. Rule number 2, when it's true, will provide you the advantage of a clear path. Absolutely nothing between you and your target. And then when these advantages are true, you'll be able to turn your attention to a smaller, faster chart. And this smaller, faster chart is a refinement chart. It's going to take a broad stroke of a brush and it's going to pull it down into an area where the market is most likely to continue. And this most likely to continue area is going to be where you enter this high probability trend trade. And by doing so, you will be able to reduce your risk and you will be able to increase your profit potential. Um, and the 2 chart concept is illustrated with this right here. John Novak put this together for me. I don't know why I keep saying his last name. You know who I'm talking about. Your big charts define that area and the direction, right? And the large chart is the large crowd opinion in the market. And the large crowd typically wins, guys. There's so much behind these moves, the momentum, the clear path. Your smaller chart is kind of that small crowd. There's a group of yahoos that love to fight the trend. And there's a group of yahoos that love to fight that momentum. And there's just enough of them that they can push the market back just a little bit. This is called a retracement. We rely on this small group to give us this retracement because this circle is where next-gen users enter that highest probability trend trade. So we're going to go with the flow, but we're going to anticipate that little bit of a fight to get us to the best of the best area. So in the interest of simplicity, guys, 20 days on the high probability trend trade, 20 days of focusing on entries, understanding the advantages, and then taking those advantages to grow. And it all starts on the large chart. And the large chart, before it does anything, is going to define the trend. Bam to you too, PFI. When the background on your large chart is green, you're in an uptrend, and your uptrend means that you should only be looking for rules to be met for high probability trend trades long. Take a picture of it, post it in the room, write your rules on it. Remember, guys, words in a room mean very little, but pictures in a room are amazing. Pictures with annotated charts. That's okay. That means that we have something to talk about, PFI. Guys, in the background on your largest chart is red. You're in a downtrend. And you're only looking for rules to be met for high probability trend trade short. And the idea that you can keep yourself out of like 50% of your mistakes simply by trading with the trend is a wonderful concept. And then once we have that trend established, we are going to look for strong triggers. Rule number 1 says strong trigger lines must be true on the larger chart. Strong trigger lines mean in an uptrend when the background is green, your small triggers have broken away from the large triggers. Both are wide, they're angled in the direction of the trend, and the space created between small and large lets us know that the trigger look is strong. And when we have strong triggers, the odds are favorable for the market to continue in the direction of the trend. In the classroom, you're going to hear it a lot. Odds favorable momentum. You're going to see it annotated OFM. And when we have odds favorable momentum, this is the most favorable look for buying pullbacks on that smaller, faster chart right at Fibonacci support. And you'll see them materialize as these wicks or these tails on your large chart. And Nexgen users, we don't trade the tails or the wicks. We use that refinement chart to pinpoint where the wick is most likely to happen. So from the point where the smalls separate, like scissors opening up, we're going to look for our opportunity right up until the smalls return to the large and work their way inside. Because when the smalls work their way inside of the large chart, we call this a weakening of the large triggers. And when we weaken large triggers, anything can happen up or down. A big fan of language, always have been. Odds favorable momentum makes me feel good about the potential of success in my trade. Anything can happen reminds me that it's more of a coin toss. And you're going to see these anything can happen triggers very often right before a reversal, right as price works its way towards Fibonacci support or resistance. So I'm going to ask all my new users, my people looking for consistency right now, is everybody comfortable with the idea that in an uptrend, smalls above the large are wide, they're angled in the direction of the trend, and in a downtrend, smalls below the large are wide, angled in the direction of the trend. The space created between small and large lets me know that the odds are favorable for the market to continue in the direction of the trend. Guys, this is your best of the best look as a new user. And I firmly believe that odds favorable momentum can cover a lot of mistakes. We see it very often. Um, so there's rule number 1, guys, in a nutshell. And it's really that simple. When we have strong triggers on the large chart, we have the advantage of momentum. And when we have the advantage of momentum, it's imperative that we make sure that we have a clear path. No termination conditions on the large chart. The clear path, no termination conditions, means that we haven't reached a Fibonacci-based indicator that may reverse the market. The areas that we're going to look to that may reverse the market are going to be red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1 dots, and then we're also going to be able to use these magenta lines, these divergence highs. A divergence is a loss of momentum, and I want you guys to keep it simple. Divergence means there was a loss of momentum in the move. When price, these dynamic Renko bars, move all the way up and then begin to come down, we call that a pivot. From up to down or down to up is a pivot. When there's a loss of momentum into this pivot, this magenta line prints from a high. Or when there's a loss of momentum from a pivot, the cyan line prints from a low. These lines print right about the third bar. So you don't see them until the market's already created the pivot. And that's important when talking about termination conditions because termination conditions require two things to happen. The first thing is that price, these dynamic Renko bars, come down and reach an area, whether it's support, resistance, yellow one-to-ones, or one of those divergence highs and lows. And when price reaches an area, all you have to do is ask yourself, where are my trigger lines? If your trigger lines remain above Fibonacci support as they do in this picture, this is an area that may stop the market. You've reached a termination condition, and this termination condition may create a bounce that's untradeable. It may create a full reversal, or it may break. And when price reaches the area, trigger lines remain above. This is the Nexgen user's opportunity to sit on their hands and wait to see which one of those options are going to happen. It's either going to break or it's going to reverse, guys. And the area is considered broken. I'm going to show you at Fibonacci support right here. Price reaches, triggers remain above. I consider Fibonacci support to be broken. You'll consider Fibonacci support to be broken when both the small and the large triggers get to the other side of that area that we're waiting to see if it'll break. So price reaches an area, no triggers through, it's not broken, the path isn't clear, rule number 2 isn't met, so you're going to sit on your hands and wait a minute. If both the small and the large triggers get to the other side of the area in question, the area is now broken and the path is now considered clear. And now you're looking for those rules to be met. You can see that odds favorable momentum, the path is clear, and there's one of those tails, one of those potential entries on the smaller, faster chart. So we're going to use these areas. Large chart termination conditions must be false. And we're going to go through and look at a few examples and talk about them. The first one's what we call a pivot stop out of a prior divergence line. Price comes down, exceeds the area, triggers, smalls get through, large can't quite do it. But you'll notice that this divergence line prints. There's a loss of momentum coming from this pivot. This line doesn't print until about right here where my mouse is, right on that third bar. The software does all the calculations. You don't have to do anything other than look for that line. This on its own is not a termination condition. This is a loss of momentum. But when price, these dynamic Renko bars, come back and reach that divergence low, typically exceeds it a couple ticks and then goes right back above, and my trigger lines do not break the divergence low, now I have a termination condition. This is what we call a pivot stop out of a prior divergence line, and these are great termination conditions. These may reverse the market, stop it cold in its tracks. If this termination creates a full reversal, meaning that your large triggers go from red to green, your smalls get above, give you that odds favorable momentum, we're going to identify this termination condition as a strong bottom. A termination condition that creates a full reversal is a strong bottom, or a termination condition that creates a full reversal is a strong top. And this picture reminds us that 90% of what you do during the day is going to be sitting on your hands and just waiting for those advantages to be present. Price, these dynamic Renko bars, reach Fibonacci resistance. And you can see that price reached it, and we got a full reversal bar off of it. That's why that tail looks like that. That was the peak price, and that's where the bar ended all the way down here. Price reaches resistance. All the trigger lines remain below, no long trades into that area of resistance. And then price pulls all the way back to support, all the trigger lines remain above, no short trades into this area of support. 90% of what you do during the day is waiting for those advantages to be present. When price returns to resistance, to this divergence high, and this second resistance, notice how all of your trigger lines remain below. Guys, this is a huge indication that this area is likely to stop the market. It's one of those pivot stop outs of the divergence high, and because it's coupled with Fibonacci, it adds power to the top. When this termination creates the full reversals, smalls are below the large go from green to red, gives you that separation between the two, and there's one of those tails. There's that odds favorable momentum and a potential pullback on a smaller, faster chart. This becomes your highest probability trend trade. This becomes your best chance of success as the new user. And you'll see it one more time. Price reaches one-to-ones. Absolutely no trigger lines break through. Because none have broken through, we're not going short. It keeps us safe, even with that odds favorable momentum. Look at the bounce and look at the indecision that happens around these key areas. These are buyers and sellers. These are the market movers fighting it out for supremacy. Next-gen users, you never have to get caught up in this moment. But when this termination creates the full reversal, look at that. The smalls get above, the large go from red to green. Both smalls and large get above resistance. It now behaves as support. The small are outside of the large, and there's one of those potential entries. Guys, this is that one that typically wins 70 to 80%. This is that one that typically gets you to that next Fibonacci area. This is going to be your bread and butter for the first 30 days, learning how to pinpoint these entries, and we're going to talk about that in just a second. But I want you to see the fibs are amazing, the areas are wonderful, but sometimes the market is going to reverse from the middle of nowhere. On a large chart, we're not going to see it. It's a broad stroke of a brush. On a large chart, we'll never see the change happening for this reversal from the bottom, and we'll never see this change happening from the reversal for the top. It even has odds favorable momentum. But we will be able to recognize it on a smaller, faster chart, and we're going to do that with the idea that three divergences, remember 3 losses of momentum, may terminate the trend. You're going to see those terminations or those losses of momentum when the cyan line prints 3 times. 3 divergences in the same location may terminate the trend. It becomes even more powerful when the small triggers work their way inside of the large triggers. When we go to that anything can happen look on your smaller, faster chart. It becomes more powerful still when your third pivot from a low is higher than the previous, or your third pivot from a high is lower than the previous. You're going to be able to use this look, these 3 divergences from a low or these 3 divergences from a high, to help you identify when change may be happening on that larger, slower chart. So even with the clear path, those 3 divergences say sit on your hands for a second. The market may push up. And even with that clear path and that odds favorable momentum, 3 divergences from a high may say just hold on for a second. We might want to push down a little bit. You're also going to be able to use those 3 divergences as a management tool. As you progress, as you grow a little bit, every great entry is going to create an opportunity for management. And if you're in a short trade, 3 divergences in the same location will give you an opportunity to manage out of that trade, to preserve your equity, right? To manage your risk. If you're in a long trade, 3 divergences may give you the opportunity to manage out of that long trade before it turns against you. And that's going to become pivotal as you work your way into these medium probability trades and outside of the high probability trend trade. So I'm going to share a couple pictures with you guys. Monday, I slow it down a little bit. Termination conditions from a high. I'm going to give you this picture. The picture has the recipe for identification on it. Save these into your spreadsheet. Put them in a folder on your computer. But the recipe is always the same. Price reaches an area and the trigger lines remain below. That's a termination condition. That concept of triggers remain below is going to help you as you grow with the software, as you begin to look for momentum trades and HVA trades, understanding that when triggers break an area, it has the potential to break. So price reaches that divergence high, trigger lines remain below, now it's a termination. Price reaches Fibonacci resistance, trigger lines remain below, now it's a termination. Price reaches one-to-ones and Fibonacci resistance. Triggers remain below, we have a termination condition at a high. If that termination creates a full reversal, we're going to label it a strong top. And a strong top is the precursor for the highest probability trend trade short that you can have. The same is true at the low. The first thing that happens is price reaches the area. I believe in repetition, guys. This is why I'm beating this horse to death. Price reaches one-to-ones, trigger lines remain above, it's a termination condition. If a termination condition, no triggers through, creates a full reversal, we're going to call it a strong bottom. That's the precursor for the highest probability trend trade that you can take. Price reaches support, the trigger lines remain above, even with odds favorable momentum. If this termination creates the full reversal, it's a strong bottom. There's that loss of momentum. and it becomes a termination condition when price reaches it, and absolutely no trigger lines break through. Guys, give me a Y in the room if you're with me on these termination conditions. Sydney, I know you're brand new. Day 2, welcome back. It's good to see you. Price reaches the area. Guys, if none of the triggers break through, sit on your hands, right? You don't have to guess. You don't have to hope. You don't have to wish. Let it either break, right? Both triggers get through, or let it reverse. Let it become that strong top or bottom. You don't have to guess. Next-gen users, we take all the guesswork out of it. All you have to do is that simple process. And I'm going to introduce you before we go to entries to your next possibility. As a brand new user for your first 20 days, you either have a clear path when both triggers get to the other side of the area, or you don't have a clear path because none of the triggers are broken through. And then, of course, chart reading will take you to the next level. Chart reading is going to create a third scenario. And the third scenario is areas have the potential to break when your trigger lines are their absolutely strongest. Strong triggers break things. So if your small triggers get through the area in question, in this case it's resistance, it reached it, we have to wait to see if it breaks or reverses. If the smalls smash through, not eke through or peek their head above, but if the smalls smash through with that odds favorable momentum, this area now has the potential to break because of the momentum. But it's not broken yet because the rules for breaking an area are small and large get through. So it has the potential to break, which means that it's not a clear path, right? It means that if we look for trades with the potential to break, we forfeit one of our 3 advantages. Smalls are through, momentum is odds favorable, the area has the potential to break. Because we give up the clear path, you're going to be sure on your charts that you don't give up momentum, right? That you don't give up that perfect entry area because we don't want to give away all of our advantages. And our ability to read charts and recognize these 3 advantages are going to help us make good decisions on trades. Here we had the small through and the large knot, and you'll notice that the area ultimately holds and reverses the market. Here we have the small through and the large knot, and this one breaks. And there's going to be conditions on your smaller, faster chart that are going to help you identify that. When the market's coming from a good top or bottom, from a termination that creates a full reversal, it's going to help you identify that. So this is what we call a 50-50 trade, new users. And a 50-50 trade simply means 50% of your indicators, 50% of those trigger lines, both lines have smashed through the area, and 50% of your trigger lines have not. The large triggers remain below. It's a medium probability trade and must be managed assertively. The entry must have the best of the best look. So I'm going to share this one with you as well. We're going to continue to focus on the high probability trend trade, but we will work our way into those 50-50s, and you're going to see a lot of them in the room today, I'm sure. And that'll be really the majority of a lot of your trades, is taking that 50-50 and understanding when the advantages are present. But to be able to recognize the advantages, we have to understand the entry. And the entry comes from that smaller, faster chart. The entry comes from that refinement chart. 1 bar on your large chart defines momentum through odds favorable momentum through those strong trigger lines. 1 bar on your large chart is going to define that clear path when the trigger lines are on the other side of the area. So on your smaller, faster chart, it should also, this is an uptrend, should also have strong trigger lines. Small should be above and outside of the large, creating that advantage of momentum even on the smaller, faster chart. And then rule number 3 says that we're going to use a limit order. You're going to use a limit order, meaning that you're going to wait for the market to come to you, and you're going to use that limit order to buy or sell a pullback. You guys remember that little push that the Yahoos give us? That's our pullback. So we're going to use a limit order to buy or sell a pullback, but we're going to let that pullback come back to areas inside of favorable large triggers. And I'm going to define favorable large triggers for you guys because this is an important concept for the new users, and it's going to allow you to reduce risk dramatically. Favorable large triggers mean that on your small chart, your large triggers, these solid, smooth lines, and your synthetic triggers, these stepped large triggers, These are actually the large triggers from your large chart. When they overlap, when they're one on top of the other, it's like two snakes going belly to belly. Guys, this is what we call favorable large triggers, and favorable large triggers create the smallest window of opportunity, which means that you're going to have the least amount of risk on a trade. Because we are going to buy or sell a pullback to an area inside of those favorable large triggers, we need to define the areas. High probability trend trades come from either fibs, mid bands, or yellow one-to-ones. It may be one, it may be a couple of them coming together in the exact same spot, but the idea is that we are going to let these areas be inside of those favorable large triggers. It's like throwing a tennis ball up against a brick wall. It doesn't matter how hard you throw it, it's likely to bounce. Every now and then you may hit a weak brick and go through, right? But we're going to look for these areas, fibs, mid-bands, yellow one-to-ones. We're going to allow them to be inside of those favorable large triggers. And this will be the look on your small chart when you make the decision that it's time to take a trade. But since rule number 3 says that we are going to buy a pullback, a small retracement in price, counter to the underlying trend, we're going to wait for the pullback. The pullback begins with a reversal bar on your small chart. Absolutely, Tim. They could never be favorable if they're going different directions. Great question, right? They are one on top of the other, strong in the direction of the trend. If one is down and one is up, Tim, that means that your charts don't have agreement, right? It means that you have two charts saying two very different things. So for favorable large triggers, we want them overlapping, headed in the direction of the trend. Great question. Because you will see instances where they're going the other way. And that's a great indication for you to kind of sit on your hands if you're looking for that high probability trend trade. When this reversal bar prints on your smaller, faster chart, it signals the beginning of that push. You're very welcome. Great question. Keep them coming, guys. You're going to create a window of opportunity on that smaller, faster chart, that point where the market is most likely to continue. It will extend in a long trade from your highest point of support to your lowest point of support inside of favorable large triggers. If we're looking for a small trade, if the trend is down, the momentum is down, your window of opportunity will extend from the lowest point of resistance to the highest point of resistance inside of favorable large triggers. So your job is to identify from the mid band down to these yellow one-to-ones and say, here's my window. You can see the square. I'm going to right click on that chart and I'm going to activate a limit order right around 79.21, right above that highest point of support. And I'm going to sit on my hands and I'm going to wait. And there's two options, guys. Either the market is going to continue in the direction of the trend, it never comes back and reaches my entry point, or it makes it back to that window. And remember, we identified the window. We looked from the highest point of favorable large triggers to the lowest point of favorable large triggers, and then within that area, from the highest point of support to the lowest point of support. And the white box identifies where the market is likely to continue. Is everybody comfortable with that? Give me a Y in the room if you're with me. We get the reversal bar, and we've got a limit order waiting right at the top of the window. Guys, this is your best of the best entry. This is the one that reduces risk. And as the market pulls down and reaches 79.21, you're in the market. And you're in the market, and I love saying this, with the advantage of momentum from the strong triggers on the large chart, with the advantage of a clear path, because there was nothing in the way. Termination conditions were false, and now you've entered the market at the most likely to continue point, that area inside of favorable large triggers, and all three advantages are in place. And when all three advantages are in place, we're going to enter at the top because of the momentum. And guys, I want you to have the expectation right off the get-go that that market may push to the bottom of the window. It is a window, right? And if it pushes to the bottom of the window, you're developing trust through repetition. You're developing trust in this methodology through presenting in class, through simulation, through taking pictures, through filling your spreadsheet. And it becomes easier and easier to watch those red numbers. We also manage our risk, guys. We manage our risk before we ever manage our profitability. And we do that by putting a protective stop outside of the window of opportunity. Your initial stop as a futures trader is going to be 12 to 14 ticks. And that gives you reaction time to put your stop where the market shouldn't go, right? Because sometimes things overrun a little bit. And if the market continues through this window of opportunity and it smacks into that stop, you're out of the trade, guys. You're no longer in a trade. You've exited for a small loss and you're okay with it because anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. I always do that. And that 20 to 30% is a cost of doing business. It's your rent, guys. It's your materials fee. 20 to 30% of the time the market's going to be wrong. It's going to hit that stop. We're just going to dust off and we're going to wait for the advantages. But the reality is if you're following this high probability trend trade, if you're working on these rules, if you're giving yourself the best of the best scenario each and every time you take the trade, you're looking at a trade that 70 to 80% of the time, this is typically your result. Profit target reached. The market pulls back right to that area. You'll notice that it goes through the mid-band and down to Fibonacci support. It doesn't make the lowest point. And because we wait for the pullback, we minimize our risk. Once we get a reversal bar in the direction of the trade, you can reduce your risk below that reversal bar. It's not uncommon to see next-gen users with 3, 4, 5 ticks of risk on a trade. And because we wait for the pullback, the room to our target grows. And it gives us an opportunity to make more money on these trades. And let me show you the coolest phenomenon ever. And this is what new users typically do. This is what I did. Is right about here, we get scared to death that the market's going without us. And I'll see a lot of people jump in up here. And when they jump in up here, the market still does what the market does typically, and they get stopped out at 12 ticks on their way back to the best of the best area. That's the first scenario. The second scenario is you're waiting for that fill, and this little fluctuation on your 5-1 chart, that 3 to 4 ticks up, gets that fear of missing out kicking in on you. And you're like, oh my gosh, this trade's going without me. And I see a lot of new users get in right at the top of this bar. Anyone else other than me done this? But what have we done? By jumping into the market rather than waiting for the absolute best entry, insisting on the absolute best entry, guys, your stop is still way down here where the market shouldn't go. It becomes unmanageable. And then the other side of that is because you're in all the way up here, look how small the distance to your target becomes. And then the worst part about that is you've got to sit through all of this rather than just waiting for that best of the best. And guys, it's a very normal part of being a new trader. That fear of missing out is very real, and it's okay. And you're going to learn through repetition to wait for that best area. And you're going to learn through repetition to trust that best area. And what you'll find is that as you grow with the software, these entries begin to go away and these best entries start to take place. And this is where you can really manage your risk. The next thing new users like to talk about, I'm trying to go through some common stuff, is on your smaller, faster chart, these small triggers may turn against you as the market comes back. I'm talking about the S&P. I'm talking about crude oil. These small triggers may turn against you guys, and they have to because they're a fast momentum indicator. If these don't turn against you, you're almost never going to make it back to that best of the best area. But here's the key. Those small triggers are still outside of the large when this pivot happens. Guys, you still have odds favorable momentum. There's just a little shift there to get you back to the best of the best area. It's very normal. It's natural. It's going to happen now and then. Remember that the large chart defines momentum. And it's okay if it decreases a little bit on that smaller, faster chart. So guys, that's your high probability trend trade. Your high probability trend trade focuses on 3 advantages, right? Your high probability trend trade is going to teach you to read your chart, understanding where it's likely to go, where it's likely to continue, where it's likely to stop. Once you have these concepts down, once you have this recognition in place, guys, your world opens up. Doors open. It's like the closet in Narnia, right? You walk in and suddenly there's 1,000 trades out there waiting for you. There's different setups, there's different things to do. But if you start with the foundation, you're going to become a chart reader, and it's going to let you know when maybe it's okay to not have the best momentum. And it's going to let you know that when we don't have that clear path, it's still appropriate to take a trade. And sometimes it's going to let you know that your entry area might fall a little bit beyond the best of the best. So this takes you to the best of the best. And then from that best of the best, you begin to grow. So guys, I'm going to give you a couple things, a little Monday stuff handout. And the first thing I'm going to give you is a checklist to take that high probability trend trade. And this checklist identifies each of the rules, and it gives you the option, simply yes or no. If as a brand new user, your only options to enter a trade are my rules are met, it's going to take a lot of the pressure off of you. It's going to take the opinion out of it. It's going to take that fear, that hope, that anxiety out of it. Because all you're doing is you're saying these create an advantage, therefore I'm going to enter the market. I've never had anybody follow this high probability trend trade checklist, strictly this checklist, and do worse than 70% winners, guys. Remember that the goal is to make money. The goal is to create a foundation capable of making money. I'm going to give you the exact same checklist, and I've stolen pictures, or let's say liberated. I've liberated pictures from the resource material. What is a good top or bottom? Here's a video to identify. Guys, this is one of the best videos new users can watch. It's going to help you understand when areas are likely to break, when they're broken, and when you shouldn't be trading into them. It shows you that this termination that creates a full reversal is that strong top or bottom, that precursor. It reminds you that odds favorable momentum sets the tone, and anything can happen triggers can kill your chances. It shows you exactly what a termination condition looks like, what it looks like to have a termination, what it looks like to have a clear path, and what it looks like to have a potentially broken area. And then finally, it teaches you to identify that window of opportunity, and it goes through each step in the process, guys. You should take this, if you're a brand new user, and look at it each and every morning. This is exactly what I'm looking for. This is going to create the advantages that I want. And then every trader should have a plan. Every trader should have a roadmap to entering the market, and every trader should have the idea of what they're going to do once they've entered. New users don't have that yet. And that's okay, right? You can't be expected to be proficient on the first week, the first day, the first hour. So, and I've added a disclaimer to this simple trading plan for consistency, guys. And this plan is a stepping stone in your learning journey. It's designed to optimize your chances of success with the high probability trend trade, or that 50-50 trade as a new user. Through simulation, study, class feedback, and continuous practice, John added this one, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. What all that fancy language means is that this is not the end of the road for you guys. This high probability trend trade is designed to keep you focused on the best of the best until your chart reading takes you out of the best of the best. And Alan, I have regrets that I didn't put this on there 3 months ago. Because I think a lot of people believe that they're shackled to this. But the problem is you guys get smart, and you get smart fast. So I need you to understand that when the easy stuff is super easy through repetition, you're going to grow, right? But your simple plan for consistency, guys, the simple plan for consistency out of the gates is never fight the large chart direction. Never fight the large chart triggers. And guys, I have to throw a huge thank you. This disclaimer came from conversations that I had with clients, guys. This conversation came from challenges that people were having that I couldn't figure out how to fix. And I'm telling you, when you guys talk to me, conversations fix everything. So from the bottom of my heart, Jay Solar, thank you for the amazing conversations, because you did this. You made this class better. You really did. The feedback from everybody, it makes this class better. So thank you guys. The beginning plan for consistency. Don't fight the large chart. And I'm telling you from experience, don't fight the direction, don't fight the triggers. It's going to keep you out of 50% of the losers that you might normally take. Focus on your high probability trend trade. Guys, I'm asking for 20 days. That's it. 20 days to focus on the best of the best entry. 20 days to get in at the right spot, because what happens is it creates manageable trades. Great entries create manageable trades. And then management for the new user, when you keep it focused and simple and pragmatic and emotionless, it gives you the opportunity to be successful while you grow your chart reading. Boring but rich. You know, someone told me the other day that a great golf game isn't pretty. And it was kind of cool because I was talking about this thing that I'm doing right now to get to a lower score, and it's not pretty and it's not exciting and it doesn't hit 300-yard drives. It's boring, but it's amazing because the results are there. So guys, we can use the idea that when we take the perfect entry as a brand new user, the stop is 12 to 14 ticks initially. It's outside of that window of opportunity. And this is emotionless, right? We're putting it there because that's where it goes, not because we're afraid of anything. It's simply where the market shouldn't go. And at this point, there's nothing to do. I'm either stopped out for a loss, it's part of the 20%. And guys, I don't sweat losses when the rules are met, because anything that wins 20 to 30 or 70 to 80 loses 20 to 30. It's a cost of doing business, and every now and then the market's going to be wrong. So I either get stopped out or I get a reversal bar in the direction of the trade. And if I get a reversal bar in the direction of the trade, I'll reduce my risk 2 ticks above that reversal bar, 2 ticks below it for a long trade. It eliminates the emotion. It's 100% if then. If this happens, then I'll do that. And that's it. I don't get to insert my 2 cents on it. And I'm focusing on this because I know I have the advantage of momentum, a clear path, and an entry where the market's likely to continue. And all I've done is I've gone from 14 ticks to about 8 ticks. I'm saving money in the event that this stop gets hit. My targets are predestined as a brand new user. I have one at $100 and I have one at $200. And at this point in the trade, I'm either stopped out, my loss is minimum, or it goes to that first target, that $100 target. The average new user is greedy. They want to hit home runs every time. If you let it reach that $100 target and you take profits, guys, there's this confidence that comes from the memory of success. There's this dopamine kick, right? There's this serotonin rush. I'm a successful trader. I just won the trade. There's $100 in my account and nobody can take it from me. And the best part is your new stop is break even. And that break even stop means that you have no risk on the trade. You've already been paid and you have nothing to lose. And it makes it easier for the brand new user to trust the large chart that got you in, right? Because the large chart says momentum and the large chart says a clear path. You have $100 in the bank and nothing to risk, and it makes it easy for you to sit on your hands and wait for that final target. And you're either going to get stopped out break even, or you're going to hit that $200 target. And no matter what your charts say, you're out of that trade for $300. You have exited the trade. If it runs for a mile in the direction of your trade, you don't care because you just made $300 with every advantage. And if that's all you do once a day for a whole week, guys, you had a $1,500 week, and you had a $6,000 month, and you had a $72,000 year because of one successful trade. Good morning, Paul. Nice to see you. Hope you had a good weekend. Everything up and running okay? Back in business? Cool. So guys, this first trade, this high probability trend trade, doesn't do anything more than teach you to get into the market at the absolute best of the best spot. And this pragmatic approach to management keeps you from inserting your opinions and your fears into the management initially. This is your first 20 days. From here, you're going to move into that 50-50 trade, that medium probability trade, right? And I've done the same thing. Here's a checklist to get you in. If we're forfeiting a clear path, the momentum should be there. Divergence shouldn't. We're looking for that good top or bottom. If divergence prints, no trade. Guys, this is designed as your platform to get you into taking these trades. After you take 100 perfect 50-50 trades, still not a high probability trend trade, but you're going to begin to recognize patterns that bring you success, that create the chances of it winning more than it loses. Your management will be a little different, still using the window of opportunity, still using reversal bars, but you're telling yourself, if I lose momentum, then I'm giving up two of my advantages that my high probability trend trade taught me. And I'll exit the trade. First contract at the trouble spot, still keeping it simple, not looking for home runs. So guys, this KISS plan may be your first 20 days. It may be your first 20 years, right? If you're finding success, you may never deviate from this plan. But the average user loves to get away from it. So that's our first hour. High probability trend trades, guys. The best of the best, reading our charts. And now we're just going to come back and we're going to look at the market, right? We're going to watch that live market. This is the S&P. There's one of those 50-50 trades. Smalls have broken through, the large have not. There's two losses of momentum, which means that not only am I sacrificing a clear path, I'm also sacrificing the advantage of momentum. And look at that third divergence from a lower pivot, and it pushes it all the way down to Fibonacci support. Patterns repeat themselves in the market, and that's why we're going through this repetition. I want you to see this picture right here, these three divergences, and I want you to compare them to the three divergences from the user guide that were taken in probably February 2021. It looks almost identical, doesn't it? Three divergences. Look how low the second one is. So all of these patterns repeat themselves over and over. Your job is to just keep doing it until they become easy, until you recognize them at a moment's notice, until you can manage your trades. And I want to show you something here. This is my library. And this library is less than a year old, and it has 5,600 pictures in it. The more pictures you take, the more you present in class, the quicker you're going to get to where you want to be. The faster you'll be able to recognize what's happening on your charts. Here, price reached resistance. None of the trigger lines broke through, guys. I know not to take a long trade, even with the odds favorable momentum. Rule number 2 isn't met. Here we had odds favorable momentum, and we had a clear path. Let's see what it looked like down there. Actually, it may have been 50-50 at the time. No divergence. Perfect entry. Area inside of favorable large triggers. When divergence prints on a 50-50 trade, we know to exit because it's not the best of the best. You're going to see these concepts that we study happen all day long. Price reaches resistance. Absolutely no trigger lines go through. They are that anything can happen triggers. And sure enough, that is your reversal. Price reaches support, even with odds favorable momentum. Absolutely no trigger lines go through. That's the point of the bounce to get you up to the next termination. So sometimes, and this happens in the middle of the night, look at this on a Sunday night, from resistance to support to resistance to support to resistance to support to resistance. You're looking at a consolidated market. You're looking at a market that's beginning to trade into channel, and rule number 2 keeps the average user from getting beat up in a market that is struggling to trend. Pattern recognition over and over, guys. It's going to happen on the S&P. It's going to happen on crude oil. Smalls below the large are wide, they're angled down. 50-50 trade with no divergence and strong triggers, and there's your perfect entry. And if I had to guess, that perfect entry may be reflected on Paul's chart. And it tried to go without you, and then it came right back to your best of the best entry. Nice trade, Paul. That's the one. And here's your study tip, guys. When you see odds favorable momentum on your large chart, when you have a clear path on your large chart and you see one of these tails, go back historically, circle the tail. Come back to your smaller, faster chart, and look how that tail pulls back to resistance inside of favorable large triggers. Would you guys like to do the entry together? Should we do a bar by bar? New users? You want to learn how to identify your best of the best spot for entries to build that patience? Everything starts on the large chart, right? Sydney, did you jump ship? Where'd you go? There you are. Cool. Sydney, this is for you. Brand new, right? This is for you guys that are brand new in here. So let's start on the large chart. The large chart leads the way. Guys, write that on a piece of paper. Large chart must lead the way because the large chart defines direction. The direction is down. The large chart is red. The large chart defines momentum. Guys, give me a Y in the room. If we have that odds favorable momentum, small below the large are wide, they're angled in the direction of the trend. This is a market where the odds are favorable to continue in the direction of the trend, right? And then we go through that whole idea. Do we have a termination condition? Did we reach an area? There it is right there. Did we reach a Fibonacci area? Did we get to support? Did we get to yellow 1-to-1s? Did we get to a divergence low? Absolutely not. And that means that the path is clear. All of my trigger lines are below support, which is acting as resistance. I haven't reached the next area. And here's an important concept. This fib off in the distance, guys, this is a target. This is not a termination because in order to have a termination, price must reach that area. Does that make sense, everybody, new users? Don't get concerned about what price hasn't hit yet. This is your target as you grow with the software. So because the rules are met on this chart, let's go to the smaller, faster chart. Everything says down. I have odds favorable momentum. My trigger lines are favorable, same direction, wide, angled in the direction of the trend, and they're one on top of the other. So all I have to do right now is what areas are falling inside of those favorable triggers. I have a mid band, and I also have yellow 1-to-1s. So I'm going through the process. I've made the decision because of the large chart, it's time to look for a trade. So my small chart is trending down and it's pushing down. And everybody's getting worried. Oh my gosh, it's going without me. It's going without me. And we're waiting for, whoops, I'm going to run out of screen here. We're waiting for a reversal bar. This reversal bar signifies the beginning of the pushback. This reversal bar is those yahoos fighting the trend and fighting direction. So at the time of this reversal bar, I'm going to create a window of opportunity. I'm going to look from the bottom of my trigger lines to the top of my trigger lines, right? But this isn't my window. Ty, this isn't my window of opportunity. Sydney, this isn't my window of opportunity. Tim, this isn't it. My window of opportunity for this trade extends from the lowest point of resistance inside of favorable large triggers to the highest point of resistance inside of favorable large triggers. We've whittled it down and refined it to one line. Can I get a Y in the room if everybody's comfortable with this idea? We have just identified where the market is most likely to continue. I'm going to activate my limit order a couple ticks below that area, guys, because as the market comes down, so does the mid band. As the market comes down, so do these trigger lines. So I'm going to be a couple ticks below. And if that mid band keeps coming down, I'm okay adjusting my entry. But right now, I'm looking at 81.29, and I'm powerless at this point. Either the market comes up. Ooh, look how that mid band keeps working its way down. Let's stay 2 ticks below it. And the market comes up. Look at those little fluctuations. Don't get caught, guys. And the market comes up, and it comes up. And I'm going to get my entry a couple ticks below. And now I'm in the market at 81.28. And guys, this is your high probability trend trade entry. The market has retraced to the point where it's most likely to continue. My stop from 28, 38, 42, that's 12 ticks. And I'll tell you guys right now, I'm always willing to risk 12 ticks on a trade with this many advantages because you've got to. Sun Tzu says that you've got to put yourself in the kill zone in order to be victorious in battle. Ha ha! Pull some literary quotes. This is your kill zone, guys. This is where you have to be. So let's put our targets in. From 28 to 18 is my first target, guys. That's that $100 target. It's going to be predetermined. It's in your ATM strategy. And then 08 is going to be my second target. And that represents $100 and $200. Is everybody comfortable so far? Pragmatic management, right? Here's our entry, best of the best. There's our initial stop, $100, $200. So all I need now is either to be stopped out of this trade, and that's okay, or I need a reversal bar. And at the time of the reversal bar, I will take my stop and I will go 1, 2 ticks above the top of that bar. I'm in at 28. My stop is 33. I have 5 ticks of risk, $50 per contract in this trade. There's nothing for me to do other than see if my first target gets hit. And guys, it happens on the 4th bar. And now you guys have $100 in the bank. Pretty easy, right? And I'm going break even. I have 0 risk and $100 in the bank. As a brand new user, following this methodical plan, you may get stopped out at $100 quite a bit, or it may continue down. Fluctuations, not worried about it, nothing to do. And hit that second target. And if it does, there's your $300 trade, guys. And notice it, with all the advantages on the large chart, it pulls right back to resistance inside of favorable large triggers. And if you're mechanical, methodical, pragmatic, if you don't let your emotions take over, that's $300, guys. You're halfway to your goal on the day from one trade with these advantages. As you grow as a user, you'll say with this much momentum, instead of $300, or instead of that $200 target, I'm going to make it $250, because all this momentum says the market's likely to go down to that fib. And that's how you begin to get more out of these trades. But I think the most important thing that I want to show you is as you're learning the software, you need to learn to develop trust in this, guys. You need to learn how to recognize this in the moment so it becomes easy. So scroll back historically, and when the rules are met, circle these tails and watch where this tail forms on my smaller, faster chart. Right at the area of resistance inside of favorable large triggers. Your job is to go find these. To scroll back on your large chart, there's one of those 50-50 trades. Let's see what it looked like. It was a 50-50 trade, but it had divergence. But it still pulled back to support inside of favorable large triggers. So maybe this is your next trade when you get a little better, right? When you start to recognize things and patterns. And you can scroll back over and over and you can find these looks. And you can identify where the market is likely to go through Fibonacci. You can understand where the market is likely to stop also from Fibonacci. And when you reach one of these key areas, you can say to yourself, I don't have a trade. I'm going to wait and see. Either this area is going to break or it's going to hold and reverse the market. And then I'll make a decision based on my rules. And guys, that's our first hour. Well, our first hour and 13 minutes. So this is crude oil directly into terms. This is the NASDAQ. Termination condition creates a full reversal. Full reversal gets us right back to the midband and support. We're in a little bit of a holding pattern. And then the S&P is doing the exact same thing, isn't it? But look how termination conditions hold. I'm going to leave you guys with the S&P. I'm going to take 5 minutes. If you have a question about a high probability trend trade, post it in the room. If you're posting your charts in the room, guys, my analysis is going to be 2-part. I'm always going to refer to the rules and the advantages because that's for my new users. But I'm going to focus heavily on the advantages that you're looking at, and I'm going to hold you accountable to your rules, to the rules that you write on your chart, guys. So if you're not writing anything on your chart that tells me why you did what you did, then my only default is to go back to those rules. Is that cool with everybody? And we're not working on this to create a plan for everybody. Every chart that I go is we're revolving around your plan. And those of you that aren't the person whose chart I'm looking at, grab those advantages that we talk about, right? Put them in the memory bank, and maybe it'll help you develop your plan a little bit. But everything's going to revolve around three advantages initially. Termination has created the full reversal, and the full reversal is beginning to give us odds favorable momentum. I need these wide and angled in the direction of the trade. But isn't it amazing to not feel compelled to take that long trade into a fib and to not get run over at the area inside of favorable large triggers? I love it. I'm going to mute for a second, guys. Mic silence. I'll be back in about 5, and we'll get into that next round. All right, guys, here we go. Second hour. Let's get into it. Let's get into some chart reading. So what I'm going to do is I'm going to scroll up to the very top of the room, and I'm going to start looking at the trades that you guys have posted. And remember, so important. Who started us off? Sophia's started us off. Sophia's trade is Sophia's trade, right? So we're going to go through and we're going to look at what she says. And she says this is a momentum trade. And she's got a good bottom. I'm assuming that means that we're coming from a termination. She has odds favorable momentum. Small's outside. There's nothing in her way. Great read, Sophia. And then you took your entry right at the large triggers, inside of the small triggers. So it came down a little bit. I'm trying to see where you entered. 94. So right there, taking all that momentum and looking for the push up. And guys, look at this, where the market is likely to go, right? Beautiful trade, plenty of profit. It seems to me that your daily goal may have been hit on the first one. It feels a little late. Well, it's just because the market is absolutely flying, Safia, and you've got to have someone take the other side of your trade. So sometimes you may try to get in and it may get you in 5, 6, 7 ticks later, right? Because they got to find someone to take the other side. Um, I was studying this one a little bit. It still is PFI. I was studying this one a little bit too, and I love it on the NASDAQ. And this is a NASDAQ uniqueness, I think. NASDAQ, you'll see that little come down and then come back up where it doesn't form a reversal bar, but then goes right back up. You see these fluctuations a lot in those momentum styles. I was doing a little bit of study this weekend, and one thing that I found in my study, and for those of you looking to emulate this trade, is you will get very focused on your small chart and forget to get momentum on your large chart. I did. I took quite a few trades like that, and they were pretty bad. But that's what Market Replay's for, to begin to learn. All right, Tim, let's take a look at it. And of course, we're always going to go back to the rules, right? You have to wait for the right moment. Yeah, so that was tough. I had challenges with it, but that's okay. It's not my trade. I don't take that trade. I took one the other day on Simulator and sent Ron a picture to try and make him proud of me. All right, Tim, are you with me? You said it looks like a good bottom. Absolutely, right? Look at how that termination holds. Nothing flinches. And then we start to come up, and I have a fib right here, right around 79.01. And what this trade is, Tim, and it's a beautiful read. And let me start with that. It's a beautiful read on continuation. It's a continuation opportunity to get to that next level when every trigger line says up. The challenge is you jumped in 5 ticks from that next level. Does that make sense? Like you were so close to that target already. And that little hop in, it becomes a difficult to manage trade. This was your first shot, I think, as the price comes back, reaches that support inside, and then the market kind of hems and haws a little bit. Um, a couple divergences, it pushes lower, and it comes all the way back down to 77, which is a pretty big dump. And then off of 77, yeah, I'm going to show you how. Off of 77, everything's coming up, right? And you notice how right about here, this great termination condition, all of your triggers start to roll. Everything starts to point up. Your large triggers point up, your small triggers point up, your small triggers are up, your synthetics are up, and everything is cranking to the upside now, kind of confirming that that good bottom is likely to push us to the next section. And this is a little advanced, Tim. And I made a picture of it just to show you, and then I posted a picture as well. Let me go back to the editor. And I'll do that, guys. When I see your pictures pre-market, sometimes I'll just create a picture. This area right in here, when we get above these one-to-ones, when we have all this momentum where everything comes together, if you're gonna take this trade, that's a great spot, right when you get above the large triggers. And what it'll do, it'll get you that extra 10, 12 ticks. Because at this point, you've cleared everything that's problematic on your smaller, faster chart. Does that make sense? And then also, a lot of times right here, there's a stab back right to the area, right to those small triggers that line up with an area, and it becomes this continuation kind of style entry. So when you take that great read about the bottom, right, but then the small chart decides it's going to give you a little bit of grief, right about here becomes your opportunity for that continuation look. It's a great read, man. Coming from support, all your trigger lines agree. Now we're just going to refine that entry so you can get a little more out of it. And the cool thing is now your stop is maybe 6 or 7 ticks behind that bar that stabs. 6 or 7 ticks initially, and then typically your risk is virtually none by the time it begins to go with that direction momentum. Great look, great lesson there too. And guys, this is taking chart reading, right? This is taking the ability to understand. Yeah, everybody does, Tim. You're brand new. But this is why keeping it focused on strong, no terms, perfect entry. Um, that's why staying focused on that first, it makes these easier. It really does. Because as a brand new user, you might be saying, oh my gosh, what did Mark just say? But let's celebrate. Direction is there, right? Momentum is getting there. The path is clear. It's just a matter of finding a way, the best way to get in. So, great job, Tim. And guys, remember, if I say something and it doesn't make any sense at all to you, let me know that it doesn't make any sense at all to you so that I can clarify and say it a different way. All right, Gary. Gary's showing a checklist for the high volume area trade. And the high volume area trade is a trade that we work on. It's a little later, but it takes all the same concepts from a high probability trend trade, and it works them into another trade that you can take. And this is a way for newer users to really have an opportunity to catch the first move off of a great termination condition. So Gary, the HVA, you say that all your charts suggest that the termination is true. And I'm inclined to disagree because you're way above these areas, right? This is a giant 50-50 trade. And you have odds favorable momentum to the upside, and it's not a termination that creates a full reversal. And your checklist says no triggers beyond the edge of Fibonacci areas, and it's pretty clear that that's happened everywhere, right? So that should be a no. And then the HVA line in the same spot as wide, small, or both triggers. Well, those triggers are up and your wide, small are down here, so that has to be a no as well. And if target not reached, including the midband, enter the trade. Well, this is bouncing directly off of support with large triggers up, small above the large. So we're directly into a termination condition. So there's actually 3 no's that need to be in there. And I'm not saying that that can't be your trade. But what I am saying is that if you're going to use a checklist, ladies and gentlemen, it's important that you follow it, right? Otherwise, it's useless. Don't bother putting it on the chart. This trade ultimately ends up going down, which makes the new user think, well, it went down, so it had to be the right trade, right? There's so much fighting going on here that it can create a little problem, especially with those smalls above the large. And while it looks good after the fact, it's a difficult trade. And Gary, I noticed that you don't have synthetics on your entry chart, and I'm not sure if that's intentional. So guys, always looking for your rules, and then how well did you follow the rules that you put on there? And there's one of those terminations. That's one of those perfect looks, right? And it never comes back, and you're absolutely right. That was your HVA trade. So I think you went from quite a few rules broken, much better looking trade there. Nice job. And then more news on Sunday than on a Monday. And then Gary, there it is. It never came back for you, right? And then it went all the way to that termination condition. And you're just like, all right, I'm going to sit and wait. We're going to see what happens. And you said not potential trend trade. And I agree, because termination condition on your 13.2 says sit on your hands and wait. And if it bounces off of support with no triggers through it, that's a potential reaction to that termination condition. Great pictures, man. Great pictures, great annotation. Good job going through everything that you're talking about. Edge trade on the NASDAQ. And guys, this is a little next level, but it's a beautiful read. Gary, there's a bad bottom that pushes you all the way back to resistance, and none of your trigger lines follow, so resistance is likely to hold. On your large chart, straight into a termination condition, everything says up. Everything says up. This is an aggressive entry. And then if you just let it roll a little bit, you get almost the exact same price with a little confirmation. Nice trade, Gary, because your largest chart predicated it. It's just a trend trade set up by the largest chart. And then here on the NASDAQ, momentum, everything says down. Again, you don't have synthetics. Oh, that's a 21.3. Gary, I'm not going to lie. I don't understand exactly what you're doing, but I think I do. You're just trading areas. You're not trading areas inside of favorable. So this is the area that's breaking. This is the pullback to it. Because everything says down, you take advantage. Beautiful. I'm going to figure it out. And guys, you're going to show me pictures too where I don't understand your rules. I don't understand the entry because it's not a rule number 3. It's not a pullback to an area inside of favorable large triggers. But let me show you the brilliance of the chart read. Because I like to celebrate positives, guys. The largest chart is smashing through the support. The support's beginning to act as resistance as it breaks. Notice that his triggers are like 90% through. So he's coming down a level, and he says everything is breaking through. This is the area that I expect to hold. I'm going to get in at it. Nice job, Gary. It's a great chart read. It's a great chart read for continuation in the direction of the overall trend. And is that the same one? This one, we're coming right off a termination condition directly into resistance. A lot of fighting on the way up. Largest chart says up, even larger chart says up from the 1-to-1. Smalls above the large, smalls above the large, smalls above the large, and you go short. Have no idea why. But it worked out. You must have a plan. And it goes all the way back down. I think we talked about that one. Everything says up. You go down. You had reasons. It's a good chart read. And there's the same trade again. A lot of double posting. That's okay. The trade's so nice, we look at them twice. Alan. Not so much a good top, right? Can we talk about why it's not a good top, Alan? Not saying it's the wrong trade. I watched this one set up as well, and my brother and I discussed it as it was setting up. Very much a 50-50 trade. Small triggers have absolutely smashed through the area, right? So when I talk about, you were looking at the 21 range fib as the top. Okay. I mean, that's okay. Then good top should go over here. This is a 50-50, right? And this is a large chart with the small triggers above the large triggers, and the large triggers are up. And I think that the point I'm trying to make here is we tend to pick the information that gets us into the trade, right? And if we look at this right here, that's a rough look for a short trade. Would you agree? I know because I was watching this one live this morning. That's a rough look on a large chart for a short. And because it's not a good top, because it's not that termination condition, right? It's a 50-50. And then there's your first pullback against the small triggers with the synthetics up. So your synthetics and your large don't match. There's a gap between the two of them, and the momentum is up against you. When I was watching this one set up, it was easy to say the market may go down from here. It was difficult for me to justify it because the trend was up, the smalls were above the large, the synthetic are up, and the small triggers are up strong. And it's really one of those points where you're either going to win this one, Alan, or you're going to get run over so fast. Um, it doesn't quite fit the rules for a momentum style trade that John Novak teaches because of the breakthrough. I like it. Your stop's in the right spot, right? It's not a bad trade, but there's a lot of challenges in it that I think are important to recognize. And where's the time of entry here? 45, 46, 45. So you got in with those large triggers still up as well. But the smalls are down, and that created an advantage. The smalls are down, that creates an advantage. The larger down, and this becomes a transition look. There's a lot of disagreement on that chart. I hope that was helpful. Just because that one doesn't fall inside of my trades, I think that you handled it well, and you're trading from areas, um, and you were willing to put the risk on it. Oh, it hit your 10-point stop. Yeah, 10 ticks isn't nearly enough for NASDAQ, right? And on something like this, Alan, one thing on the NASDAQ that may prove, uh, be a little helpful is if you're thinking short and those small triggers are coming up really strong, notice how that close below is almost the same price as that one that bounces off. Maybe a little extra, since this isn't perfect, at least get to the right side of those smalls. And it's virtually the same trade, but you're not fighting that immediate momentum right off the get-go. Nice job. And then Safia, let's see what you have. Termination creates the full reversal. Full reversal gives you a momentum style entry off of the purple 1-to-1s. Got filled a little late. And you're out at the second level. Nice job. Everything said down, so you went down. Safia, I think you found your mojo on this trade. Very nicely done. Then Jose trades because he's good at it. Guys, there was our bar by bar that we did together on the entry. Does everyone see it? Smalls below the larger wide. We did this one in class. Jose caught it perfect. And remember I said with all that momentum, that fib may be a second target? Picture perfect, Jose. I don't think you could have done that any better. Ladies and gentlemen, if you're filling up your spreadsheet with the perfect trade looks, with the 100% rules-based looks, this is one of the ones that you can put on that list, right? So I'm going to put Jose's trade in there. And I'm going to call it Jose trades perfectly. That was the perfect picture, wasn't it? And let's look at it. That was 25 points on the second. That's a $250 trade, guys, and that happens in a matter of seconds. Or no, I'm sorry. That's about a 3-minute trade. It's 100% rules based. It has every advantage in place. It has the picture perfect entry with virtually no risk once it goes in the direction of the trade. And notice that he gets in on the way up. He's not getting in on the way down. And there's no concern with the fluctuation because of the advantages here. And then Jose, great usage of the 1-to-1s on your largest chart, taking profits at an appropriate spot. Beautiful trading. And guys, once you can catch this one, you'll start catching all of them. Alan, termination on the 55. Everything says up directly into a termination condition on the smaller, faster. And then this one pulls right back on that 50-50, no divergence. And you get the close above. Alan, have you been here for the talk about trigger line location? 360, nice job. And this is for NASDAQ, guys. So for you guys that are trading NASDAQ, if all of your rules are met, and this is your area for entry, when these large triggers are a full bar away, you've got time to manage. And that it becomes an easier entry on the NASDAQ. It gets in, it creates a more manageable trade. And you're absolutely right, Alan, with all the strength and momentum, that close above is no problem. Like, don't even need it at that point. So I'm going to put this one in the NASDAQery section that I'm building because when I started trading the NASDAQ, this was one of the patterns that I began to recognize. There we go. And what it did for me, Alan, is it let me get in either at the best spot or wait for those trigger lines to slow down a little bit before I got in. Great job, man. Nice trading. And then Sofia. Everything says up. You were in down here where the area broke, and you got out at Fibonacci resistance, a couple of them, and everything's going up. So you said, hey, why not go to the next area? Sofia. You managed with the other chart? Did your chart freeze or did it get bumped a little bit? Because I've done that before where I bumped it. It froze. Bummer. Great job. Look at that. 37 and a quarter points. 37 and a quarter points, Sofia. Can I point something out? Do you see that? I'm looking at the number 37.25, but Sofia had to make sure that I knew it was 40. Good job. Have you noticed that of the three trades that you posted today, they all look the same? Do you think that's a big deal when it comes to consistent trading and success? I hope that you guys recognize this because this is one of the biggest things for new users. It doesn't matter what trades you take. I'm using the C word. I'm confused. Oh, consistency. Yeah, the C word. I don't care what trades you take, guys. Take the same trades. Have a plan for entry and a plan for exit. And what you'll find is that when you start looking for the best, for what's most comfortable to you, instead of looking for what's most comfortable for everyone else, you're going to find your groove, guys. And when you find your groove, great things happen. Nice job, Safia. And just fair warning, you're going to have a day where you backpedal a little bit. You did it. And that's okay. Backpedaling happens as a day trader, guys, because you get smarter every day and you see things differently every day. So if that happens, take a deep breath, regroup, and go back to what was bringing you success. Or as Ron would say, dance with the girl what brung you. Beautiful job, Safia. Great job. And then Paul, there was that 50-50 trade on crude oil. Small triggers smashing through, large triggers, not quite. You're coming from that mid band that was acting as a termination condition. Everything says down, and 80.97 has the potential to break. So Paul says, if this has the potential to break, I want it to be perfect over here, which means that no divergence, right? No loss of momentum. He takes it from the area inside of favorable large triggers. He's already taken profits on one, and he has absolutely nothing to lose on the trade. It's possible, Dr. P, and I'm not sure, that since the mid band inside of favorable large triggers is where the trend trade will come from. No, that's not it because her chart froze, so never mind, I'm not sure. I can't answer that one. Safia will have to answer it. After you finished, it was at the mid band, but your entry is momentum style, yes, Safia? Breakthrough, pull back to one-to-ones. Did you add contracts? Not yet, PFI. I see how that's a little confusing. That's okay. It's a momentum style trade. And a momentum style trade says that when the bars break the one-to-ones on the entry chart, Dr. P, with that momentum, it creates an opportunity to get in here and head up. I'm not sure what the midband says. Oh, here we go. A little clarity. I love it. And I love that you guys provide the clarity. Yeah, nowhere near the midband. The midband was way down here. So it's a momentum style entry. The midband never came into play, right? Am I looking at that right, Safia? The midband never came into play. It was just a momentum trade. Am I reading it correctly? Yep. So, truth in advertising, right? That's okay. But it's an amazing trade. It's an awesome trade. But if you're trying to replicate it over and over, then it's imperative that you know that it was that it was in fact the yellow one-to-ones for entry rather than the midband, right? Does that make sense? Not knocking the trade at all, not knocking the entry. So Dr. P, this is a different look, and let me show you exactly what I mean. Give me 1 second, and I think that I can help with that. So there's two types of momentum trades, Dr. P. Um, I'm going to Discord and I'm going to the rules just so I can steal some pictures real quick. And I think you're going to like this. So when we go to the rules and we talk about the one that John's talking about, that momentum style trade. Um, so the one that John teaches is right up close to the top. And it's when you get that great termination and it creates a full bar, you're looking for that little pullback to the one-to-ones or the or mid band right there with the small triggers cranking. This is the first momentum style trade. This is the one that's coming from a good top or bottom. And this is the one that when John came in class a while ago, this is the one that he made the video for. The one that Safia is taking here, and let me just see if I can find a real world example, is, and I'm going to go to the NASDAQ because I think that I can probably find a better example over here. So I'm just going to look for a small chart example. Um, it's similar, Dr. P. It's the same idea of momentum on the large chart. So I want you, and we have to use our imagination for a second. The large chart has odds, favorable momentum, and a clear path. And then the way that we're using this one is when the bars break this one-to-one and it stabs back with odds, favorable momentum, it creates you're relying on that momentum, but you're also embracing the idea that you have some sort of area to trade from. Does that make sense? So the large chart still predicates odds favorable, clear path. And when everything is screaming and you get this little hiccup right at a one-to-one where it breaks and snaps back to it, it's just taking advantage of the momentum in the moment. And then if you get a loss of momentum, it creates a management opportunity. If you want, post a few pictures of what you're doing. Yeah, and I'm happy to help. I like the momentum trade a lot. I really do. Um, but the key is that you have that momentum, right? And let's see if there's, I don't think that this one set up an opportunity. If the path were clear, that little pullback to the one-to-ones maybe, but that's not the best example. So feel free to share a few. But that's the one that Safia took there, where the large chart said everything is strong, everything's going, and it's that little blip back to the one-to-ones. Good stuff. It's a little different take on that top or bottom momentum. I hope that was helpful. Um, kind of, yes. The way you use it on just the way that you'll use it, and yeah, exactly. Break the fib or one-to-one, pull back to it on that breakout when that momentum is its absolute strongest. Absolutely. I think we're on the exact same page there. And then it can also be used with that clear path, right? So when it's not even a breakout, because typically on the breakout trade, it's almost like a 50-50 with a quick blip because the large triggers usually aren't through yet. So you may see one like right here where you get that little blip at one-to-ones. And strong momentum all charts, absolutely. Yeah, I would. Otherwise, it's a termination condition, and I'm a big fan that strong triggers break things, but I'm also a huge believer in termination conditions. So I try to have that balance. I try to have the small triggers through, giving it a fighting chance um, before I look for continuation. That's just me. That's my trading. All right, PFI. Entry, pullback to resistance inside of favorable large triggers. Yeah. You woke up late. You had the night shift with baby Celine. Major copy open, saw this beautiful setup. Target should have been 10 ticks. Fib was closer, so you moved both targets to the fib. And then you didn't want to feel like a putz if it turned around on me. So you trailed the stop because you couldn't figure out how to sell one contract. Gave up 5 ticks of profit, but still excellent 28 ticks total. Especially happy because you didn't take any trades Friday. And Dr. P, seriously, take some pictures and put them in here. We'll talk about all of them. I'm a huge fan of the trade. I don't take it very often, but I do understand it. And we'll look for all the advantages so that we can be consistent. I love it when you guys post, and I feel like I've got a new sense of clarity to make sure that the people that aren't taking your trades understand that they're not their trades. So, um, PFI, are you with me? That was the first entry, right? Beautiful. Pull back to resistance. You saw it, but you were a little late, little coffee. Isn't this also a pullback to resistance inside of favorable large triggers with all the rules met? This is heads up, man. This is like, I missed it. Wait a minute. They're coming back for me. Beautiful. And then you're in at 22. Could have taken one at 12, right? But you got two of them at 8. You have to change this over here to one contract. So let's go over that. But you didn't want to feel like a putz. Let's address that first. You're in charge of your feelings. I won't tell you how to feel. Ready? Can I beat you up? Are you still sleepy enough to take it? So let's get you feeling like a putz. Your words, not mine. When you have odds favorable momentum, when you have absolutely nothing in the way, right? When everything is screaming down, let's make it so you feel like a putz when you jump ship 5 ticks before your target. Rather than, right? This right here is you saying, I'm not going to ask the pretty girl to dance. She's already not dancing with you. You've already got your risk. You're all good. Man, everything says down. And sometimes it doesn't, right? What happens more often than not with this momentum? Let's look. And this is where you're building trust, right? You can't stop a freight train. Same thing. It's hard to stop a freight train. Use those fibs, man. You paid good money for those fibs. But careful about feeling like a putz. Yeah, dude, it was beautiful. So let's do this real quick. Let me help you out. Let's say hypothetically. So is your ATM strategy set up on just two contracts, one target? Two targets? How do they end up together then? Oh, just two contracts, one target at the same spot? No worries. Oh, you move them together. So if you do that, let's say I go short right here. I'm not saying it's a rules-based trade. And I accidentally move my two targets together, right? And I'm like, uh-oh, I didn't mean to do that. Now I have two contracts down here, but I really want to take one off right here. I'm going to have to change my quantity to one. And since I sold, I can right click, buy limit one, and it'll put that first contract right where it needs to be. And then I'm trying to get it hit. When it hits that target, it switches this one down to one contract. Does that make sense? And it takes that. Yeah. The rules are the same. Strong triggers, no terminations, pull back to an area inside of favorable large triggers. PFI, can you find a high probability trend trade inside of 5 seconds, 6 seconds by opening the charts? Okay. Then you're going to have to work through the nuances of NASDAQ. I'll show you some of the ones that I talk about. Um, so Dr. Pete, so we'll go over those PFI. Let me get through. It's super fast. I love it though. Um, Dr. P, the idea behind it always has been, let me find it. On your largest chart, the workspaces were always designed. And if this is, I'm looking at a 13.2, so on a NASDAQ, it's not the same. But on the 13.2, you're going to have the fibs that are native. PFI, I'm going to talk about NASDAQ after we go through everybody's charts. It'll be a second hour discussion. So on your large chart, you're going to have the ones that are native. These are my 13.2 fibs, and they extend all the way through. And then on the largest chart, you're also going to see a 21.3 fib areas, that fat fib, and you're going to see these skinny little fibs that don't extend all the way, and those are your 5.1. And that's the traditional setup on your largest chart, is from the time frame above and the time frame from the entry chart. So you'll see these, and that's typically how they're set up. Every other chart is going to be the native fibs. So when I look at a 5.1 chart, and let me get off of NASDAQ. So this is my S&P, and you can see if I pull it off, the full blue lines are native. The skinny little line that doesn't extend is my 5.1, and this big fat line up here is going to be my 21.3. And then on the small chart, it's just the native fibs coming through. And this one at 86 is this little one right here. And I think that the lesson that's important on this one, let me see if this one will set up for it, is as your large chart is breaking through areas and sets up that 50-50 scenario, it may look like it's coming directly off of support on a smaller, faster chart. And this is where I always remind people that because this is a different time frame, because the trigger lines are different, even when it looks like we're coming off support here, we may have those 50-50 rules met over here to create an opportunity. So I respect all of the lines on the large chart and the trigger line location to it. And sometimes it stops to the tick. But see how this one is beginning to break, but these are way below here? So using the large chart for the areas and the small chart for entries helps out quite a bit, I think. Exactly. Yes, sir. You're welcome. And look at this, guys. There's that overrun with weak triggers, and there's those three divergences in the same time frame, letting us know that this may in fact be overrun. Pretty cool small chart termination, right? Great questions today, guys. Keep them coming. Um, these questions are what get everybody better. It really does. And remember, guys, feed off of one another, but remember that everybody's kind of new and everybody's finding their mojo. Oops, Sophia, we looked at that one. That was just your entry. And what's comfortable for one person may not be comfortable for another. And this is what we were just looking at. Paul's saying, with everything down below the areas, we may get a continuation. We may get one of those instances where a bad bottom finishes the move down to the next fib. But with everything rolling up in the three divergences in a holding pattern, right, Paul? Just waiting for the advantages. And it's just not giving it, is it? These three divergences, fourth divergence, fifth divergence, now these are starting to get above the fib. Small triggers are starting to roll. We're just in a holding pattern. On the S&P, there's just nothing to do yet. And then here on crude oil, we had the 50-50. What did it look like? No divergence on the 50-50. And then divergence creates an exit condition. And now we're in a holding pattern as it dances through the fibs. And then the NASDAQ termination creates a full reversal creates odds favorable. Dr. P, all that momentum coming from a termination condition. Whoops. There's that momentum style trade. As everything's starting to break through, everything's breaking through, and it stabs right back to the fib with that odds favorable. Does that make sense? That's the perfect example of what we were just talking about. And then notice how right here the smalls have broken, and right here we're still below. And it's that little patience piece to give you the best chance of success. And that's it. And then it goes straight up to Fibonacci resistance. But letting the large chart lead the way, right? Termination creates full reversal, creates odds favorable, and taking the one where the areas start to break, not the ones that are trading directly into the area. I think that's a big key with the momentum, is at least having the potential for a clear path. And look how strong those triggers are. Man, it does. And I see more momentum style trades on NASDAQ, Dr. P, than I do on the others because of the strength, because of everything going. And then PFI and all of my NASDAQ traders, one of the things that I've done, and I'm going to, guys, full disclosure, I blew out about 6 Apex accounts trying to learn to trade the NASDAQ because I didn't go through the same process that I tell you guys to go through because apparently I was thick-headed that week or that month, or it took me about 4 or 5 weeks to do it. When you make the move to the NASDAQ, I want you to understand that the NASDAQ moves twice as fast, that the NASDAQ moves with a lot more strength, and the NASDAQ will run you over rapidly. And it becomes frustrating But the core idea is the same. The absolute at its core idea on the NASDAQ, and it all goes back to chart reading. I'm going to sound like a broken record. It all goes back to chart reading. It all goes back to momentum. And it all goes back to a clear path. And then being able to pick that point where the market is most likely to continue. This is the chart reading that creates opportunity in the NASDAQ. But the high probability trend trade on the NASDAQ may have a challenge every now and then. There's a nuance to the NASDAQ that creates problems. And that nuance, the first one, and this is what I lost a lot on, guys. And true story is I had to go through this process. What didn't work? I had to go back and look at my trades, what worked and what didn't work. And guys, I want you to know that I took about 78 hickeys for you so that you wouldn't have to do all the work. I did it for you. And the work was when these small triggers are up really strong on the NASDAQ, don't fight them. They're going to act as support if they're coming up strong from a bottom, and they're also going to act as resistance if they're coming down strong from a top. But if I'm coming through on this 50-50 trade, right? The smalls are through, the large are not. It's not a good top. Divergence prints. But I'm thinking I want to take a shot at this trade. My willingness to not fight these small triggers creates an advantage. If this market's really going to go down, ultimately I'm going to get a close on the correct side of those small. So what I've done is I've started this look on the NASDAQ, right? Termination, full reversal, odds favorable. Everything says the market's likely to continue down. I know that it's likely to close the gap to the large triggers, so when it does, I look for the entry on the correct side of the small rather than trying to guess when it's going to turn against those small triggers, and it creates a great opportunity. So guys, if you steal my spreadsheet and let me put it in there, I'm starting to build this database. Odds favorable, everything says up, right? Here's our pullback. Two divergences print on the 50-50. And when I finally get that close on the correct side of the smalls, it creates an opportunity. Does that make sense, NASDAQ traders? Simply not fighting the smalls. Being patient, right? It pays dividends. Smalls are cranking up, right? Look how they act as support. But when I get to the correct side, everything runs. And you'll see this a lot on those 50-50s, guys. This one says never fight smalls. It seems like a reoccurring theme. Everything says up, the path is clear, the trade looks great. Look at the strength that the small triggers are coming against it. This is where I tell myself, hey, wait for a close on the small. If it's really going to go, it's going to get to the right side of those small triggers. And this look right here is the one that eliminated so many. Dr. P, if the rules are met 100%, I want to close on the correct side. And the reason that I want to close on the correct side and not just price to get above it, because when they're coming down this strong, smalls will act as resistance. So I may get a fluctuation that comes right up into it, and I may go, oh, that's my trade, that's my bar. But if it doesn't close on the correct side, we're not getting that little shift in mentality. Does that make sense? And let me see if I can find one of those pictures. I guess I can go through these. There's that fluctuation right there. See how it acts as support? I can't tell you how much money I've given away on that look. And then there's that resistance acting. And this close above the small is like 3 days above the area. And that becomes problematic. And that brings me to the next pattern. Do you see how as price pulls back, the small triggers are a full bar away? NASDAQ traders, give me a Y if you see that. When price reaches the absolute perfect area, and those angry small triggers are a full bar away, I can take it at the area and I can manage it when it hits the area, right? I can reduce my risk. I can make sure that I'm not leaving 15 ticks, 20 ticks on this trade when I get to that area. And Alan, you had a great picture of this one earlier. Looks almost exactly the same. I wonder if I can find it real quick. So many pictures. There it is right there, Alan. See how far away the small triggers are? That's a lot of profit difference, isn't it? That's like 7 points, 140 bucks. So that's one of those other patterns that I look for. And these are the two most common, guys. And this is what I'm filling my spreadsheet with. But you'll notice that out of 11 pictures, 9 of them say don't fight the smalls. Because I've found through taking boot to butt repeatedly that it creates a challenge. And then one more. Let's just go through. Whoops. There's a dead link. Don't fight the smalls. Once again, same look. Smalls act as support. And then there's that small bar's a full bar away. And Alan was nice enough to contribute to the spreadsheet. So guys, when you start learning these and you start seeing these, you start embracing these and they become second nature for you. And you're like, hey, Mark, check it out. I found another example of it. Well, then we're pretty good. And then Dr. P, everything says down, cranking through. There's one of those little momentums that kind of breaks through, pulls right back to it, continues down until the divergence pulls your momentum out of that trade. And that's the second half of those momentum trades, guys. If it's momentum in, well, then it should be momentum out. If you took this momentum trade, divergence says it may push higher, and it turns into one of those trend trades. So please, as you find things, if you do study and you find things on the NASDAQ that make sense to you, let me know. Weak top, odds favorable. You take the close below. And then, guys, here's that in Sofia. There's that example one more time. Thank you for it. Whoops, that's not my call out. And this is kind of what Allen's was. Same thing. If conditions are right for a short and your area is a full bar away from smalls, take and manage back to them, right? Because a full bar away on this NASDAQ is like 26 ticks. So it gives you an opportunity to take it and then manage a little bit as it comes down. Does that make sense? And this is the other pattern that I began to recognize. The smalls are coming up, but they're so far away from the right area. It gives you a shot at getting in and making a little more. So I'll put this one in here as well. Almost instant, right? And so, Safia, can I ask, and this is a loaded question leading the witness, is it your desire to make money that's making you money, or is it the process? Is it doing the same thing? Is it having a plan? Because your trading has turned around 180 degrees in the last week or two. And we talk about this a lot, guys. Let the process yield the results. Let the process lead the way. Let the idea that this predetermined plan to get in and out of the market is really what's going to create the success. And then the success is going to happen when you execute the plan. And I notice that you're up to 6 contracts. Started on 2, right? Same great trades, same great looks, same advantages. But now it's just more money because it's more contracts. I'm sure somebody said that before me. I just apply it to what we're doing here. But I get absolutely giddy watching you guys take these trades, watching you guys take advantage of that momentum and taking advantage of that clear path and giving yourself the absolute best of the best. And there's one of those continuations when everything kind of rolls and says the same direction. There's that resistance, full bar away, areas cleared. That's just a continuation of all the nonsense that happened off the termination. And now it's heading its way down. Great job, everybody. I'll leave you with the S&P as it trades down. And then, Paul, that was your continuation. Did you get it? The market suggests that it's going to continue down. All the triggers are below, right? Divergence pushes it higher. Multiple divergences up top. And guys, this becomes the point where every one of your charts agrees for more down. And it is not the best momentum look, but everything else is perfect. No divergence, pull back to resistance inside, clear path, and it goes straight to Fibonacci support. Can't argue with triggers. Amen. So guys, give me a Y if you see this. 3 divergences says pause, right? Not the best momentum, and it's validated here on the smaller chart. 3 divergences push it up into no man's land. And then ultimately, everything continues in the direction, and there's your opportunity to take advantage. Beautiful trade, Ron. Great recognition. Paul, I hope you caught it because you were patiently waiting for it. I'm going to leave you guys with the S&P. I'm going to go stand up and stretch for a second. I would encourage you to do the same. Get in the habit of getting out of your seat every now and then, right? Walk around the house. Walk outside. I'd say breathe the fresh air. We don't have that here. For those of you that watch the news, Washington is on fire right now, and I hope everybody stays safe. But when your forecast says smoke, it's pretty weird. It's like apocalyptic here. It's crazy. I'll be back in about 5 minutes, guys, and then we'll finish the class strong. If you have questions about anything that we've talked about, if you have questions about any of the trades that you're working on, if you have questions about the management that you're working on, post those in the room and let me know how I can help. I'll be back in about 5.
All right, guys, back at it. PFI, did you catch all those NASDAQ lessons? I hope so. I do hope so. All right, so I'm going to start with you guys right here. This was something that John and I put together Sunday morning. He's having coffee in Florida, and then I was having coffee. I don't know. I was either in Washington or Oregon or something. I paid extra for the Echo Ron. It's that 1970s reverb. I'm going for a different kind of thing. Let me disconnect and reconnect my AirPods real quick. Hold on 1 second, guys.
That should be better. Actually, I wasn't using them at all, it turns out. I was just using the speaker or the microphone on my laptop. That's good to know that there's an option for that. PFI, then we can talk about it at some point, but we'll get you squared away. I put my spreadsheet in there. There's some great pictures that'll help. And then let me know if you have specific questions, and we'll talk about it every day, guys. Every day. Just keep it on simulator when you make that transition so that you can work through these nuances yourself. Guys, this is something John and I came up with one morning. And we're just like, let's let people know what it is that they're in for, right? This is what the path looks like. And the one thing that has proven to be true over and over and over, guys, is to minimize your learning curve. Post pictures of your trades in class. Every trade, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory, but a long-term failure. And how are you going to know the difference? To be sure, you need feedback from us meaning John, meaning me, and we are here to help. Our goal is your success, 100% of the time. If you're on your simulator, if you're participating in class, you can't lose money like that, guys. There is no threat of bankruptcy from simulator participation. So simulate everything, try everything, trade everything, and get them in the room. And what you're going to find is that your losers are going to provide more information than the winners. The losers are what we need to get rid of. The winners, those are great. You could skip posting winners all day long if you know why you won. Get the losers in here so we can refine. But you need someone to tell you what you did right or wrong. And that hurts sometimes. It hurts sometimes to hear you did something wrong. Your natural reaction is going to be to fight me, and that's okay. A lot of people do it. They fight me, but we always go back to the rules. Right or wrong is defined by the rules that you put on your chart. So if you tell me this is what I'm doing and why I'm doing it, then it's impossible for it to be wrong, ever. But I can talk about the challenges that present themselves, and the feedback's going to help get you to where you want to be. I've been doing this for years. I recognize patterns, and whether it's my trading plan or not, I understand the advantages. It says use that outline for education, guys, and that outline for education is this one right here, your step-by-step path to becoming a confident trader. Populate your spreadsheet, use all the trades using a checklist in the beginning. Get that foundation. And when you are presenting in class, make sure that you're presenting those annotated charts. This is what I saw. This is why I did it. This is how I felt. This is where I feel I need help. This is what I feel I did well, right? Let us know as much as you possibly can. Study those historical chart setups. Go through and make sure that you're not just relying on a video to make you smart. You're not just relying on that little time in the live market to make you smart. Go back and circle those tails over and over and make sure that they fit the rules and make those trades become easy. Make those looks become easy. And then you're going to create the database using that spreadsheet. And then guys, once you've done that, once you've learned the rules, you've identified the rules, you've worked on your entries for 20 days, define your management plan. And again, that's put right there for you in the simple trading plan. Your base foundational management plan is there. Initially, a mechanical approach that eliminates emotion or opinion tends to be the most straightforward approach for new users. And then you can alter your plan after you're done with the education, right? We talked about that mechanical plan once. about moving the stop to break even. And PFI goes, hey, wouldn't it make sense to maybe keep the risk on the trade so you don't get hit break even because the large chart says you're going to the next area? And I thought, absolutely. And that's an alteration that you can make. Um, and then finally, guys, accepting that you may be less capable of a trader than you initially believed your first time out. Um, Everyone feels entitled to win. And that sentence right there, everyone feels entitled to win, was altered just a little bit from Mark Novak feels entitled to win. I felt entitled to win when I started trading because my last name was Novak, because my brother wrote the software, because Nexgen has been around for decades, and I just assumed that I'd be great at this because I was really good at everything that I tried. Um, I found success easy. So I jumped the ship or jumped too soon and I went live and I lost 5 grand in a matter of seconds. And now you don't have to do that. Now you can use these prop firms, these proprietary trading firms, where you can go through and you can test your plan. You can take your great entries, you can take your management plan, and you can test them like this. And it gives you access to capital. It reduces your risk because you're trading a monthly fee and not putting thousands of your own dollars. The cost versus payout is great. What you're paying a month and what you have the potential to take out with a successful plan is huge. John gives you 4 of them. He talks about the click here for the link, right? And there's your different prop firms. So using one of those becomes a huge advantage as you move forward with the software and it's time to really test your plan. But guys, this has been proven to be effective 1,000 times over. Post your trades in class, use your spreadsheet, keep it focused on learning to read your charts for 20 days. Keep it simple. There's no reason to add 7 or 8 charts in there, different time frames, extra indicators, right? Keep it simple first. Embrace that idea, and then you're going to be solid. You're going to get exactly where you want to be, and you're going to remind yourself that it's a marathon, it's not a sprint. There's a beautiful termination condition. Kablooey, right into a red fib. NASDAQ's trying to figure out, isn't it? We had a termination condition that went straight to a termination condition. And then it never got that momentum as it came down. Smalls couldn't even get outside. Where was it? Down here. Divergence, divergence. You had a small chart fib. Then it comes right back up to resistance. So we don't take it. There's your strong triggers. Dr. P, Tony, PFI, Kablooey. Right? Do you see how strong the triggers are coming here? Just a great patience piece. Oh man, I'm going to hold off. And if you're convinced that because we're pulling back to support and the triggers are up and everything is up, that you want to go long, that you have to go long, that close above the smalls, look at what it does. Creates an opportunity. And then with all that momentum, there's that break through the one-to-ones and stab back. Everything says up. Still not a high probability trade because you're trading into a termination condition. And then it comes up, the smalls break through, the large are wide, 3 divergences coming off of support, smalls outside of the large. It's a 50-50 trade. 50% of my triggers are through, 50% are not. There's support, mid bands, yellow one-to-ones. Right now, the small triggers are a full bar away. I don't have divergence. If I decide to take this trade, I'm in. My stop has to go outside of the window of opportunity. And I have to remember all the time that this is, in fact, a medium probability trade. It's not a high probability trend trade. I have the advantage of momentum, but I don't have the advantage of a clear path, right? I need a reversal bar, in order to put this 2 ticks below it. There we go. And here's those small triggers. Let's see if they act as resistance or if the market with all of this momentum from a good bottom continues through to our first target. And it goes through to the first target, at which point I'll go break even plus a tick. I have yellow 1-to-1s that haven't been reached. I'll put my second target just below those yellow 1-to-1s. The momentum carries me. Target filled. Guys, say hello to Trading Nexgen. Any questions about what just happened? Pretty easy, right, Tony? Everything was pragmatic. Everything, I knew exactly what I had to do before I ever had to do it, right? 50-50, coming from a good bottom, no divergence, small's a full bar away, enter at the area. I even got in late. First target reached, second target reached, and look at the bounce that happened off of the 1-to-1s with all the triggers below it. Your goal should be to be this fluid and effortless every time you take a trade. And that just comes through repetition. That's fun. Safia, don't know anything about it. And I hate to say it. I don't know anything about the stop. I don't use stop strategies. I have my stops and targets in place. And then if they need to be moved because the conditions change, I do it manually. I don't use anything automated I don't use stop strategies or anything. And I never have. Sorry, that wasn't that wasn't very helpful. I like to be in control of everything. I like to be in control of my stop movement. I like to be in control of my target placement, so I've never even explored it. And then Walter, absolutely, the order is filled. When the target's reached, it'll say target filled, and it'll exit that one contract. And then when the second one gets hit, it'll say target filled, and it'll exit the second. And then if it comes back and hits my limit order, you'll hear order filled as it comes in. So when it reaches your entry or it reaches the target, you'll hear that order filled. I don't know if you guys could hear it. I could hear it in my ears in my headphones. You're welcome. And then guys, what do you think as you grow as a trader a little bit with this momentum from such a good bottom? You may say, I won't get out unless divergence, right? Yeah, they probably do. Guys, I'm always willing to tell you if I don't have the answer. A lot of times I can go find it. Safia, I feel like this is one of those times where the traders chat becomes a great resource because there's probably going to be more people in that experienced area that have done it, used it, and you may find a little bit of the help you need on it. Or since nobody's posting questions, let's do this. Ninja Trader stop strategy. Um, it's only 4 minutes, but that may help out a little bit. Ninja Trader has so many resources. I always forget that they're there, though. I always forget to look for them, and I start searching everything else. But maybe that'll help you a little bit. Shoot, I might private message you and see if I can become smarter. So look at that, guys. Weak triggers right into 1-to-1s. None of them break through. Looks like our exit was pretty good, wasn't it? Give me a Y if you see it, guys. We had a termination, odds favorable, 50-50, no divergence because the small triggers didn't follow in at the area. First target, second target at the 1-to-1s. So what if it overruns? It only overran 4 ticks. And divergence wasn't true until all the way down here. We used where the market was likely to go as a potential entry. Chart reading, ladies and gentlemen. What do you guys want to talk about? The key difference, Walter, is one of them is going to rely on a pullback to an area inside of favorable large triggers. Um, the momentum trade, it depends. If you're talking about the one from a top or bottom, it takes the same concepts of a high probability trend trade. It takes that great termination condition. It takes trigger lines being their absolute strongest. I feel as though the momentum trade is an advanced trade. The momentum trade has more moving parts that are easier to break. And I think that the momentum trade, while it is a fantastic trade, it's imperative that you understand. So in this case, that would have been a momentum trade. And that momentum trade only lasts until it turns into a high probability trend trade. No PFI. Because there's reversal bars all day long, right? Up and down all day long. Great question, Sydney. So PFI, we talked about this earlier. I think you were in support at that point. Not just a reversal bar. I want to see a close on the correct side of the triggers after the rules are met. Does that make sense? Not just any close on the correct side of the triggers, but after the rules are met. So this is a termination condition. There's no more long trades. The reversal bars are cool, but if they form inside of the small triggers strong against you, it's typically going to result in a butt kicking. So waiting for that little patience piece. Now we have a termination that creates a full reversal. The full reversal gives us odds favorable. It's another one of those 50-50 looks, guys. Smalls are through, large are not. Large triggers are favorable. So we just go through the process again, right? A tick or two below the lowest point of resistance. No divergence is printed. And right now my small triggers are still down. I feel pretty good about it, right? And here it comes. Oops, that mid band's a little lower. I'm going to drop down. Oh, divergence printed. Do you see it, everybody? Divergence prints on a 50-50 trade. Not quite, almost. But because divergence prints on the 50-50 trade, if I'm embracing that plan that says this loss of momentum stops my trade, then I just cancel my order. But because it's coming from a termination that creates a full reversal, the likelihood of success goes up. And Dr. P, you're exactly right. But a pivot stop out on the small chart doesn't mean a lot to me. It gives me a great opportunity to push up higher. The one that I'm looking for to put a stop to the party would be the pivot stop out here. Does that make sense? And then guys, because of the strong top, because of the small window, because of the small triggers away, my plan says ignore the divergence. I canceled it because the KISS plan says don't. And then where's your target? Same thing you were talking about, Dr. P. That blue line becomes a target. And target reached. Beautiful trade. Does that make sense, everybody? If you're studying the KISS plan first, your highest chance of success says don't take this trade because of divergence, right? And then everybody gets this, but Mark, I missed it. But Mark, oops, wrong one. So my KISS trading plan initially, I want to go through how you're going to grow as a trader. Says no divergence, and it says from a good top or bottom. I can tell you guys right now, I will accept one divergence if I'm coming from a good top or bottom and I have that look of momentum. Does that make sense? If I'm coming from a good top or bottom, because that termination creates a full reversal, I'm willing to ignore one divergence. But as a brand new user, this divergence is a deal breaker because we're not putting it all together fast enough, right? So that plan is designed to keep you safe. Now I have two divergences on a 50-50 trade. Now my small triggers are above the reversal bar marker. So Dr. P, let's see if the small triggers act as support or if this one's just going to keep going down. It's kind of neat, right? You begin to recognize these patterns over and over. And I know that this takes away a little bit of an advantage for me because not only is it 50-50, not only do I have two losses of momentum, but now I had small triggers that were closer than a bar. Here's one of your guys, that's your NASDAQ nuance. Look what's happening. And this is why PFI, a close on the correct side, not necessarily just a reversal bar. Pretty cool, right? Let's see what happens if it closes on the correct side. Is this making sense to everybody that's learning the NASDAQ right now? I hope that's helpful. Still everything down from a good top, but our small triggers are giving us a little bit of patience. This reversal bar marker, there's my close below. I waited for the close below. That's my first trouble spot. How quick was that? And I'm break even. And I'm out. I got slipped too. But Dr. P, Tony the Tiger, all you guys, Alan, do you see how waiting for that close below gives me a better shot without fighting these small triggers? And because it was so bad, break even wouldn't have been hit before, but still made money on it, right? Pretty cool. Live in front of you. Everybody, you're going to get there. You're going to get to this point. All right, Sydney, you asked the question, what's the difference between a high volume area trade and a trend trade? Great question. So the HVA trade, Sydney, is kind of your first shot from a good top or bottom, from a termination that's creating a reversal. And I won't say created a reversal because remember that the large chart is slower. So the first thing that happens, Sydney, is if price trades all the way to resistance, and I'm going to go from this picture to an example of it. And when it reaches resistance, none of my triggers break through. This is an area that may reverse the market. We know that from termination conditions, and that's why we don't trade into them. Well, if this is really going to reverse the market, trigger lines are going to roll, and you're going to see that roll on your smaller, faster chart first. You'll be able to add, and you will add eventually, what we call a range chart. And a range chart deals with the volume of the market per bar. And the range chart also creates what we call high volume areas, these magenta lines from a high or these green lines from a low. And an HVA trade gives you a recipe to take advantage of this termination condition before the first trend trade ever happens. So if a termination holds and my triggers roll, I can use that range chart for my first shot for a short. And then typically from that first shot from a short, if the trend trade rules are met, then my second trade becomes that high probability trend trade. New users are encouraged to not worry about this one in the beginning, to focus on this high probability trend trade and just keep taking it until that next support is reached. Because this one teaches you to recognize termination conditions, and this one teaches you to recognize trigger line strength, and this one teaches you how to identify areas where the market is likely to continue. But when you're comfortable with that high probability trend trade, remember guys, every trade stems from a basic chart reading. Well, then you'll be able to come to that HVA trade. And that HVA trade ultimately looks like when a termination condition is true and your trigger lines roll, you can look for that HVA trade. And it's awesome because it just creates an extra opportunity for you. It creates another opportunity for you to get in and to take advantage. And then once again, look at how that momentum carries you directly to the fib. The triggers don't break. We know not to take this short, right? Small triggers, everything. All right, Ed. So let's ask ourselves, can we go through the rules together? Because I noticed that you didn't write any on your chart. And I know I sound like a pain in the butt broken record when I say this, but it's pretty cool. So let's start with the trend is up. I'm going to give a pink arrow for the trend. The momentum is up. Smalls are above the large are wide. They're angled in the direction of the trend. Are we on the same page so far? Notice that I'm still on the large chart. Trend is up. Triggers are up. Gary, I haven't gotten to it yet. Sorry, I will. My apologies. The biggest challenge that I see right now is the box is cool, right? But the box is after a termination condition. So right now we're trading into an area that none of the triggers are broken. So the box becomes problematic. We don't know if this area is going to hold or break. Does that make sense? But let's not ignore the beauty of this is you took a perfect momentum trade to get to that area. So there's one of those beautiful momentum trades. Everything says up. We haven't reached the area. You take the stab back to the one-to-ones, which is perfect. You didn't trust it for a second, but you get back in and you take it right to the area. But at this box right here, we're trading directly into a termination condition. So you've lost your advantage of a clear path. Give me a Y if that makes sense. I love your momentum trade, rock star, and then just a little bit of patience. Great job. And then J Solar, termination, full reversal, odds favorable, clear path. They're trying to get back to that mid-band inside of favorable large triggers. They just didn't work. And you're absolutely right. Two divergences on the high probability trend trade only start to get nervous when it becomes three. J Solar, picture perfect trading. Absolutely beautiful. Momentum, clear path, great entry, and you take it right to the trouble spot where you get paid. Solid. Gary, perfect. Everything that we talked about, right? No reason to go long into a termination condition, but nice recovery. And this is one of those pictures, right? Some of you are saying, but guys, he didn't wait for the mid-band. He knew what he was doing. And out at the trouble. Nope, it's perfect, isn't it? Fits your list 100%. But the point I was making, Gary, is that when I'm coming from a good top and I have this much momentum, I might ignore one division. I don't know. It may be one discrepancy in tick data. I'd have to look at it. I'll look at it. But if our fibs are the same, we're probably in the same time frame. That could be a little discrepancy in data. I had all new indicators loaded up this morning. 100% clean out reboot. J Solar, you fudged on the entry a little bit, didn't you? It didn't make that mid-band or support, but isn't it perfect? I love it. I think this is such a great trade. And Gary's trade, perfect. And Gary, what the easiest ways to make money, ladies and gentlemen, is to skip this trade. Is to just skip this trade. Skip that trade into termination conditions, right? Because the little bit of money that you lost here ate into this one. So, and this is for me, guys. This is talking from my experiences. This trade is what? $500 trade, let's say. If I lost 300 here, I'm only net 200. But if I skip this one that breaks the rules, then I get to keep all 500. And I think that you find that over time when you start talking about those rules and you talk about giving yourself every advantage and then being willing to break those rules a little bit, right? Termination. Guys, there's your John Novak momentum style look. There's your not favorable large triggers, but with odds favorable momentum from a termination look. And there it is again. And guys, this isn't the best trigger look, but it's a lot of advantages. Pretty cool, right? And this is what we do every day, ladies and gentlemen. We talk about advantages and then we help you form them into a plan that fits your needs, right? So, Sydney, as you grow, um, you're going to find what's comfortable for you. Insea, you nailed that momentum trade, and now because you posted a picture, we were able to have a very simple conversation that says this potential trend trade is directly into an area that may reverse the market. And then you have to make the decision about whether or not you're willing to take that risk. But the things that I find, the most successful traders in this room, the most successful traders in the traders chat room, are the ones that are doing the same thing every time. The ones that aren't giving themselves the burden of excessive chart reading, but rather giving themselves the luxury of a simple plan that embraces advantages. And I see it every day. And what I realized is that I kept trying to keep people focused on the best of the best, right? I want you to focus on the best of the best initially, but then I want you to break outside. I want you to break free from the shackles of the simple plan. But I want you to remember that the simple plan is designed to keep you where you need to be until your chart reading gets you where you want to be. So your 50-50 trades will grow. Your high probability trend trades will turn into opportunities where your chart reading says, I'm missing one, but I have the other two. I can still take this trade and manage it, right? You're going to grow outside into what's comfortable. But the things that remain true over and over is that termination conditions may reverse the market. And that's a true fact no matter what your plan is. A loss of momentum creates a disadvantage because anything can happen up or down. And that truth carries into whatever plan you trade. And every plan needs an entry area, whether it is at an area or not. But every plan needs a set of rules that allow you to manage your risk, right? Because you have to manage risk before profit. And that's why we teach the foundation. And that's why I give you this simple trading plan. And that's why we have you focus on entries first. Because once you get good at those entries, it's amazing what you can pull off. Three divergences in the same spot may push lower. Notice that it pushed lower straight to those synthetics, all the way to those large, a full bar away. And notice how you got to close above the small triggers at those large triggers after a termination with odds favorable. The three divergences did their job. Absolutely, Sydney. Let me give it to you right now. And remember, this isn't the end of your education. This is just a little safety net for you to keep you focused while you learn to read your charts. You're welcome. Guys, does everybody understand the gap theory? That when price accelerates from these small triggers, I love this look, guys. This is one of my favorite trades. Termination condition creates the full reversal. We have a strong bottom, right? Everything says up, the momentum is up, everything is cranking north. But those large triggers remain a full bar away. Give me a Y if you're with me so far. The gap theory, ladies and gentlemen, says that when price accelerates away from those synthetics, away from those large triggers, fast and furious, and smacks into something, whether it's a fib or a mid-band, it's likely to close the gap back. It's likely to snap back all the way to those large triggers. Awesome, Ron. Have a blast. So what happens here is those large triggers don't follow, and price does exactly that. Three divergences lets me know that it's likely to push lower, and we can identify exactly where that lower spot is. So Dr. P, Tony, Alan, if you understand the gap theory, if you appreciate the strong bottom, you can take that first close, your risk is established, or when the triggers start to roll, you can take that little snapback, right? But for me, I'm probably in at '06, and I'm looking for that fib. Does that make sense, everybody? That's another progression. That's chart reading, finding trades. I'm not going short because of the gap theory, because fighting strong triggers is financial suicide, and you will run out of luck. Look how it went straight to that divergence high, and it creates a little fluctuation on my small chart, but my large chart still says odds favorable. I love it. You guys want to do this again tomorrow? I feel like we could, but that's it for me today.